Very, very good morning, everyone. How are you all? Super. Okay. So last class we have done amalgamation chapter and financial statement of companies. In amalgamation chapter, any doubt? Have you tried any questions? Bolo. Okay. Now, so today we'll take consolidation, consolidated financial statement as per AS 21. Then we'll take AS 23 and AS 27 also. That is also thoda sa related to consolidation only. Then AS 15 and AS 18. Okay. So coming to consolidated financial statement, once again I will say this chapter is very simple once you have understood what to do, what not to do. Means normally what happens, there are two ways of teaching, either format based or concept based. If you do format based, then only you can handle the question whatever you are doing. If you are doing conceptual based, then you can do any question whatever asked in exam. Correct? Of course, format need to be understood because format will save your time. But if you understand only format, this will come here, this will come here, then in exam you will be stuck. Okay. Now, once again, one major point of this chapter that every teacher will teach consolidation chapter in different way. Means their way of teaching will be different. Correct? But overall the concept remain same. Now, when I say consolidated financial statement, it is a financial statement of a group company. When I say group means what? A group is of a parent and a subsidiary. Means parent and subsidiary together will make a group. So who are parent? A parent is an entity that has one or more subsidiaries. So any entity which has subsidiaries become parent company. So which is subsidiary company? Subsidiary company is a company which is controlled by another entity which is known as parent company. It means we need to understand what is the meaning of control. Means whenever a company has a control over another entity, so the relationship of parent and subsidiary will be created, and then parent company will prepare two set of financial statement. One is known as their own financial statement, that is commonly known as separate financial statement, and second is known as consolidated financial statement. Of course, in this chapter we are not discussing about their own financial statement, we are discussing about consolidated financial statement. So when the control is acquired, the control is acquired by some rule. So they have given two rules. If any one rule is satisfied, control is acquired. So if the entity has directly or indirectly, more than 50% of voting power, voting power means 50% of equity share capital, 50% of paid up equity share capital of another entity, then of course control is acquired by the entity who has more than 50% of voting power. Not directly or indirectly. So it can be either direct acquisition, it can be indirect acquisition. Indirect acquisition is always through subsidiaries. Means if I say in this way, कि A Limited has 60% of B Limited. So here A become parent and B become subsidiary. So this A Limited will prepare what? Their own separate financial statement as well as consolidated financial statement. Correct? So this CFS is prepared as per AS 21. So this is direct acquisition. Or we can say in this way, A control B 60% and B also have more than 50% voting power, let us say 70% of C. 70% C. So here B is also a parent and A is also a parent. Correct? Now B will prepare CFS with C. B will prepare CFS with C, but A will prepare CFS with with B and C, because can I say this B is a subsidiary of A, and through B C is also subsidiary of what? A. Because A will control B directly and A will control C indirectly through what? Its own subsidiary, means B. So it means it is also what? Direct, means C will also become subsidiary of A. So A will prepare CFS with B and C. However, this type of question is not in our syllabus. Means they will never ask this type of question in CA intern. For this, you need to come to CA final. Okay, correct. But question can be asked in multiple choice question whether C is a subsidiary of A or not. So of course, C is also a subsidiary of A. So here ultimate parent company is A. Ultimate parent company is A. If I say in this way, A is holding 40% and B is holding 60% of C. So of course, B is a parent of C. So B will prepare CFS with C. Now whether A will prepare CFS with B. So B is not a subsidiary of A. So if B is not a subsidiary of A, so C cannot be a subsidiary of A. So chain will be created only through what? Subsidiaries. Chain will be created only through subsidiaries. This type of question can be asked in MCQs. Or second condition is what? This condition is not so much important from exam point of view. Our entire question is based on first condition. Our entire question is based on first condition. So what is second condition? If entity control the composition of the board of directors. If entity control the composition of board of directors in case of company, correct now. So then also control is acquired. Control the composition of board of directors means they have a right to appoint directors, terminate directors, means they will decide who will be the directors. So if suppose there are 10 directors and majority of directors are appointed by A Limited. So out of 10 directors, 7 directors are appointed by A Limited. So of course, all the 7 directors will take decision based on A. So it means A will control the entire, A will have the entire decision making power of that company through directors. Understood? So that will also give rise to control. But this is only from theoretical point of view. If they ask the meaning of control, then only you need to write down these two. From practical question only, condition number A is important. Have you understood this point? Have you understood this point? So one thing is clear that our Companies Act, as per section 129 of Companies Act, as per section 129 of Companies Act, it mandated every company to prepare CFS. So as per Companies Act, we need to prepare CFS. AS21 does not make it mandatory to prepare CFS. AS21 says that if you are preparing CFS, CFS should be prepared as per AS21. So AS21 does not make it obligatory to prepare CFS. However, if entity prepares CFS due to legal requirement or any other requirement, they need to prepare CFS as per the requirement of AS21. As per the requirement of AS21. Correct? Got this point? Bolo. Have you understood this point? Now, we'll discuss about associate and joint venture in the next chapter. So right now, I am not discussing anything about associate and joint venture. So of course, whenever there is an associate and joint venture, then also CFS need to be prepared. But when we'll discuss in next, when we'll do AS23 and AS27. Got this point? Yes, sir. Now, of course, whenever we prepare consolidated financial statement, so we need to prepare consolidated balance sheet, consolidated SOPL, consolidated cash flow statement, and notes to account, consolidated notes to account. However, from our examination point of view, consolidated cash flow statement is not in our syllabus, correct? So we need to only discuss the consolidated balance sheet and also SOPL. In 2 attempts they have asked SOPL question also, 2 attempts. So consolidated SOPL, now it become important. Now it become important. Anytime they can ask consolidated SOPL also. Got this point? So first we'll concentrate on balance sheet, then we'll understand how to prepare consolidated SOPL. Correct? Understood this much? Now this preparation of consolidated financial statement, there are some concepts. One by one, let us discuss all the concepts. One by one, let us discuss all the concepts. Now before I start the concept, let me say, if this is a parent company, this is a parent company. So parent company will have asset, liability, equity, share capital, and reserve and surplus. Reserve and surplus. And this is a subsidiary company. So in this also there will be asset, liability, equity, share capital, and reserve and surplus. Correct? But in this there will be one investment. investment in subsidiary company, investment in subsidiary company, correct? It means, can I say, suppose they have invested in 70% of equity shares of subsidiary company. So this equity share capital, 70% belong to whom? Parent company. And 30% belong to whom? Minority interest. So 30% become minority interest. 30% become minority interest. Means, can I say, other owner of subsidiary company are what? Minority interest. Other owner of subsidiary company are minority interest. Got this point? Correct. So what is the objective of this chapter? What is the objective? In simple word, I will say, this investment means, if this investment is replaced by the asset and liability of subsidiary, correct? Means we replace investment by assets and liability of subsidiary company. Got this point? So this become consolidated financial statement, correct? So okay, this investment is nothing but purchase consideration. Means if you think about amalgamation chapter, how to calculate goodwill or gain or bargain purchase, how to calculate, the formula remains same, PC minus fair value of netto. PC minus fair value netto. In amalgamation chapter, we need to calculate PC. In this chapter, PC will be given. Only this is the difference. Understood? Means this chapter become more easy, because in amalgamation chapter, we have done 2-hour discussion of PC only. And if PC is wrong, your entire amalgamation solution is wrong. But here PC will be given. So smile na. Are bol de? Because this investment is nothing but PC only, because they have acquired 75% by paying this much amount. Are bolna rahe? Are you getting what I am saying? Dekho, I am giving you the concept. Right now I can see from your eyebrow, this is coming like this. So it means sometime when I am saying and you are not able to correlate with your previous classes, you will be confused what this teacher is saying. Yes or no? Are bolna rahe? Correct? So I can understand that conceptual lacking is there. There is lack of concept, and because of this reason, this chapter become difficult. Because in exam, only what will work? Your concept. This is the fact. This is 100% fact. Got this point? So thoda sa you need to be with me. If you are not able to understand anything, raise your hand. What will you do? Raise your hand. Sir, what you are saying? Please, one second. So I will explain again. Understood? But a smiling face. Smiling face. Everyone should smile. Correct? Now, whenever you are not happy now, whenever you are not happy, smile. You will become happy. Correct? Understood? Whenever you are not happy, you smile, you become happy. Okay? So always smiling face. In any situation, you do smile. Chalo, theek hai. So what I say, the PC will be given the question. Correct. It means, can I say, if you want to calculate goodwill or capital reserve, what is the formula? PC will be given in the balance sheet. So this is nothing but cost price of investment. Now investment is accounted in separate financial statement as per AS 13. So it means we need to thoda sa understand the AS 13 also. But AS 13 we missed it. AS 13 we missed it in day 1. But I can explain with, even though we don't know AS 13. So this is nothing but has been recorded as per AS 13. As per AS 13. Chalega. And can you say from these, if we minus netto is what? Asset minus liability. Netto means asset minus liability. So this is asset minus liability. But I will take at carrying amount of fair value. Carrying amount of fair value. In amalgamation chapter, we have taken at carrying amount of fair value. So here also we'll take at fair value. If fair value is not given, then we'll assume carrying amount and fair value are same. As carrying amount is equal to book value. Carrying amount and book value are same. I normally use carrying amount. Carrying amount chalega na? Okay. So chalo theek hai. If suppose you know fair value, so we have written fair value. This becomes net asset fair value. But this is 70%. So this is to 100%. So we should take 70% or 100%. 70%. We'll take 70% and this will become goodwill or capital reserve. This will become goodwill or capital reserve. And whatever we have not taken 30%, this 30% is minority interest. This 30% is minority interest. Are you able to understand? So this 30% becomes minority interest. Got this point? Have you understood? So can you say, because they have only 70% control, 70% control, correct? Now 70% control is not correct. देखो, just try to understand, whenever they have a control, control cannot be partial. Control will be always full control. So it is not 70% control. When I am saying 70% control, this is wrong statement. Just try to understand. If I say I am controlling you, so whether I will control, whether I am able to control 100% or 70%, full control na. Your parent, you are under the control of your parent. Whether it is partial control, ki full control. Means whatever your parent will say, you'll do it or not. And if you are not following your parent, means you are not under the control of your parents. It means now, so there cannot be partial control. It is always full control. So it means parent has full control over subsidiary, even though they have acquired 70% ownership right. Means they owned 70%, but they have full control. They have owned 70%, but they have full control. Means this parent has full control, but their ownership right is what? 70%. So, but this consolidated financial statement we are preparing based on ownership or based on control? Based on ownership or based on control? Based on anyone saying ownership? थोड़ा इधर से आवाज. Ownership? No. Entire thing from the beginning I am saying control. How now you are saying ownership? So it means consolidated financial statement is based on control, not based on ownership. It is based on control. So you only say in the consolidated financial statement in the CFS. So if I am writing asset, parent company, subsidiary company, this will come 100%. So asset of subsidiary company will come 100% or 70%? 100%. Why? Because this is based on control, not based on ownership. So if you are writing 100% asset, 100% right, 100% liability, but out of that 30% belong to whom? And therefore minority interest will come in the consolidated financial statement, because minority interest represent 30, as per my example, 30% of net asset which are controlled by, once again, minority interest represent 30% of net asset of subsidiary company which are controlled by parent company but owned by minority interest. So that is under the control of parent company. Therefore, it will come in the balance sheet of. Achha, what is the meaning of asset? Asset means any resource which are under ownership or under control. Under control. So can you say for the definition of asset also the control is more important. Ownership is not important. We have done AS 19. Lease asset is under the control of lessee, ki under the ownership of lessee. Control. Therefore, we disclose that lease asset in the balance sheet of lessee because that is under the control. But there is no ownership. 0% ownership, but full control. Therefore, asset will be shown based on control, not based on ownership. Understood? Are you able to understand what I am saying? Thoda sa concept. So first concept is what? Concept number 1 is calculation of goodwill or capital reserve. So formula you understood. PC minus. What is the formula? Formula calculation of goodwill or capital reserve on the date of acquisition. We also call it cost of control. So what is the formula? PC. PC is nothing but cost price of investment less parent company share in fair value of net asset of subsidiary company on the date of acquisition. Fair value of net asset of subsidiary company on the date of acquisition. This become goodwill or means formula remains same. AS 14 also same formula. AS 21 also same formula. Formula is no difference. Got this point? Concept number 1 you have understood. Now coming to concept number 2. So can you say in this chapter what happened? Just try to understand. They will give you, this is the date of acquisition. Means 70% they have acquired on this date. But you need to prepare CFS on the date of consolidation. This will be 31st March. So we need to prepare consolidated financial statement on this date. So we call it, this is date of acquisition and this is date of consolidation. So you only say goodwill or capital reserve will be calculated on the date of acquisition, ki date of consolidation, date of acquisition. So we need to calculate goodwill or capital reserve on the date of acquisition. It means you want net asset of subsidiary company on which date? On the date of acquisition. On the date of acquisition. It means you want balance sheet of subsidiary company on which date? On the date of acquisition. But they will not give the balance sheet of subsidiary company on the date of acquisition. Agree? I say this chapter is totally bakwas from practical point of view. Totally bakwas. Means this chapter we are doing only from examination point of view. Correct now? Practically the situation is totally different. Because practically we will have assets and liability of the subsidiary company on the date of acquisition. So we can find out this is asset, this is liability, that is from the balance sheet, and we can take the asset and liability. But in exam they will not give the asset and liability of subsidiary company on the date of acquisition. Therefore, we'll apply Bachpan wala equation. Bachpan wala equation is what? Equity is equal to asset minus liability. So if asset liability is not given, so we can apply equity approach. We can apply equity approach. Are you able to understand? So what we'll do? We'll prepare one statement of net asset. We'll prepare one statement of net asset. Listen, whatever I am saying, listen. Even though you have not done in this way, you will be able to follow me. Okay? So we'll write on date of acquisition. We write on date of consolidation. Suppose this is 1/4/2020 and this is 31st March 2021. So can you say this become post acquisition period? The post acquisition period is 2021. So the entire 12 month become what? Post acquisition period. Post acquisition period. Correct? Are you able to understand? And because they have not given assets and liability on the date of acquisition, we'll use equity approach. Means we'll take equity share capital of which company? Subsidiary company. And we'll take reserve and surplus of which company? Subsidiary company. Can you say this is nothing but net asset? Bole ya samjho? Equity plus reserve and surplus is equal to asset minus liability. Are you able to understand? Means you only say from this statement we are calculating net asset or we are calculating equity? Net asset. We are calculating net asset. Because for this chapter we want net asset. But because the information of net asset is not given, we don't have any other option. We apply equity approach, that is equity share capital plus reserve and surplus. Correct? So this become net asset on the date of, and this become net asset on the date of, suppose this is 1 lakh and this is 1,20,000. So but why 1 lakh become 1,20,000? Due to profit earned during the year. So this is known as post acquisition profit. We call it what? Post acquisition profit. Post acquisition profit. Are you able to follow me? Are you able to follow me? Are you able to follow me? Now you only say for goodwill we want 1 lakh ki 1,20,000 for goodwill calculation. Concept number 1. We require 1 lakh. So this can be allocated to 70% and 30%. And this 70% can be written in this formula and we can find out what? Goodwill or capital reserve. I hope you are understanding. And 30% will become what? But on which date? On the date of acquisition. So it will become 30% minority interest on the date of acquisition. But we are preparing CBS on which date? So can I say we need to find minority interest on this date? So some adjustment is required or not? Some adjustment is required. Are you able to follow me? Anyone who is not able to follow me, please raise your hand. Please raise your hand. Okay? Please means I'm requesting. I'm not ordering. There's a difference between ordering and requesting. Correct? Got this point? Yes, sir. Okay, sir. Why? Huh? No, nothing to sorry. You came. I am grateful. Just try to understand. This is your classroom. Correct? This is not my classroom. And this is your career. This is not, you are not in this classroom for my career, na? For your career. So you should be sorry to yourself, not to me. Yes or no? Whatever you are doing for yourself. Whether you are doing for me. Bolo. You are studying for whom? For yourself. So think that you are studying for yourself. Are you getting what I'm saying? Only in the entire life, only this knowledge is yours. Nothing is yours. This knowledge will be yours and the balance is not yours. Whatever money you are earning now, that belong to your family, not to you. But knowledge can't be shared. Means whatever knowledge you have, whether it can be taken by anyone, it cannot be taken by anyone. But your money can be taken by any other person. Are you able to understand what I am saying? And this knowledge only belong to you. This will be with you till you die. Till you die. Understood? And therefore, in this is your classroom, your career. Whatever you are doing for yourself. Correct? Okay. Have you understood this much? But just try to understand, when I am saying equity share capital, this I have taken from balance sheet. And this reserve and surplus I have taken from balance sheet. Balance sheet of which company? Subsidiary company. So, but this is book value of net asset or fair value of net asset? Book value. But we want what? Fair value. Some adjustment is required or not. So, some more concept will come. Some more concept is going to come. So, this is book value of net asset, but we want what? Fair value of net asset. It means some more adjustment is required. Some more adjustment is required. If fair value information is not given, then this book value will become what? Fair value. That will become super easy question. That will become super easy question. So what is concept number 2? Preparation of statement of net asset of subsidiary company on the date of acquisition and date of consolidation by using which approach? Why equity approach? Because the information will not be given the question. But if they have given the information of assets and liability, we'll apply assets and liability, asset minus liability. So in some of the question of ICS study material, where they ask only goodwill capital reserve, they have given the information directly about assets and liability. So sometimes students confused. Sometimes we are taking assets and liability, sometimes we are taking equity share capital reserve and surplus, and full blunder. Are you able to understand? Are you able to understand? Yes, sir. Okay, this you have understood. This statement you have understood. Bolo. Statement you understood. Now just try to understand. It means, can I say, we need to find out post acquisition profit. We need to find out post acquisition profit, and this post acquisition profit also belong to what? Parent company and minority interest, but based on ownership ratio, because profit will be shared based on ownership ratio. So 70% belong to, and it is my example. It can be 80-20 also. Huh? It can be 90-10 also. Okay, na? As per my example, because initially I have said 70, so I am saying 70 only. Okay, so 70-30%. So this will be transferred to retained earning of parent company. Means this become the profit of parent company. So will be transferred to PL of parent company. PL of parent company, and from PL it will go to surplus in reserve and surplus. Surplus means nothing but retained earning. We call it retained earning. Got this point? Have you understood this point? And this will be added to what? Minority interest. This will be added to minority interest. It means we need to find out post acquisition profit. Correct. Now just try to understand. If suppose this is 1/4 and this is 31st March. If this is the date of acquisition, the entire 12 months become what? Post acquisition period. But they will not give this type of question. They will give some masala to disturb you. Correct. In this chapter, they only want to check your presence of mind. Nothing more than that. Because conceptually, this chapter is totally bakwas. Correct. So what they will say? They will say this is not the date of acquisition. They will say 1/7 is the date of acquisition. Now 1/7 is the date of acquisition. So can you say this 12-month profit has two parts? One is pre, one is post. Correct. It means this much. This is reserved. This much profit up to this date is pre-acquisition profit, and this become post-acquisition profit. It means whenever this is the situation, so we do one analysis of profit. We prepare what? One analysis of profit. And in this chapter, the most important working note is what? Analysis of profit. Most important working note is what? Analysis of profit. Correct? Now, let me explain you through one example. Suppose this is the example. If you want to write down, write. If you don't want to write down, then also write. Suppose this is 1/4/2020, 31st March 2021, and 1/7/2020. This is the date of acquisition Date of consolidation. Understood the question? DOA means what? DOC means what? Date of consolidation. Okay. Now they will give you equity share capital 1 lakh on this date, and reserve and surplus they have given 3 lakh on this date. Correct? And they will give reserve and surplus as on this date also. Suppose 1 lakh they have given. Normally they will not give this. They will not give this in exam. Correct? Are you able to understand? Correct. On the date of acquisition, they will say is 70% acquired at suppose 1,20,000. Suppose let's say 3 lakh at 3 lakh. So this is the purchase consideration. This is the cost price of investment. This will be from balance sheet. We can get the information. Correct? This is the simplest question. Now in this 3 month is what? Pre, and this 9 month is what? Post. So can you see we want net asset on this date? We want net asset on this date. Correct now? Are you getting what I am saying? So this profit will be also pre-profit, and this should be added to this, and that will become reserve and surplus on this date. Yes or no? Means if you want a reserve and surplus as on this date, so you need to first find out pre-acquisition profit, and you should add to the opening balance now. So that will become reserve and surplus on the date of acquisition. So equity share capital on the date of acquisition and reserve and surplus on the date of acquisition will become net asset on the date of acquisition. Therefore, some analysis of profit is required. What is required? Analysis of profit is required. Are you able to understand? Have you understood? Are you able to understand this point? Correct. And this will be post-acquisition profit. This will be allocated to parent company and minority interest as per 70% and 30%. As per 70% and 30%. So first we'll prepare working note number 1. We call it AOP. AOP means analysis of profit. You write down full if you want to write down. I will write down AOP. AOP means what? Analysis of profit. Correct. So we'll say what is the closing balance of reserve and surplus? 3 lakh. Okay. Then what is the opening balance of reserve and surplus? 1 lakh. So can you see this difference is nothing but profit for the year. This is profit for which year? 2021. 2 lakh is the profit for the year. But out of this, 3 months is pre and 9 months is post. Correct? Can you see, practically speaking, so we should prepare trial balance as on this date, and we should find out profit of 3 months as per the transaction of 3 months. Now, practically we should record all the journal entries, then prepare ledger account, then prepare trial balance, then prepare PL account. Now, but here, because we don't have any option, we'll assume bakwas assumption that this 2 lakh has been uniformly earned throughout the year. Super bakwas. Super bakwas na, but only from exam point of view. I said this chapter is only from, practically this chapter is totally different. Correct? Don't apply this chapter practically. Okay? So can you say, we'll say how much pre, how much post, so we'll allocate, we'll do allocation, allocated profit in which ratio? Time ratio. 3:9. So can you allocate 2 lakh in 3:9? 50,000 and 1,50,000. Allocation done. Now in this we'll add opening balance. Opening balance will be added to pre ki post. That is pre only. Opening balance is pre-acquisition profit. Opening balance will be added in this. So can you say this become total pre-acquisition profit? So total pre-acquisition profit is what? 1 lakh. 50,000 and total post acquisition profit is how much? 1,50,000. This is AOP. Abhi in AOP there are many adjustments into that. This is super easy question. I'm just explaining why we are preparing AOP. Why we are preparing AOP. Understood? Have you understood this? Chalega? Yes, sir. Correct. Now we prepare working note number 2. What? SONA. SONA means what? Statement on net asset. Most of the teachers don't prepare SONA. They will do directly. But I will suggest prepare SONA. This will avoid your mistake. Avoid your mistake. How many of you have prepared SONA? Statement of net asset? No one has prepared now. So if you want, I can delete. Means we can also do directly. But you will feel the advantage of this. You will feel the advantage of this. So can we prepare SONA? If you permit me. If you understood the concept now, SONA. So if you have understood concept, we can prepare now. Yes, sir. So we write down date of acquisition, date of consolidation, and beach mein what? Post. So date of acquisition is 1/7. This is 31st March, and this is 9 months. 9 months. Now we write down equity share capital. What is the closing balance? 1 lakh. And if nothing has been given, our opening balance will assume for equity share capital, there is no changes in equity share capital. So always assume that. This is general assumption. You can't change the assumption. Okay. 1 lakh. So post is nil. Post changes is nil. Now we write down reserve and surplus, but the pre already we calculated 1,50,000. Post how much we calculated? And date of consolidation how much? This will be equal to closing balance. Check karo, what was our closing balance? 3 lakh. So we are doing perfectly correct. And this will become what? The net asset. 2,50,000, 1,50,000 and 4 lakh. Now we'll allocate this into parent company and MI. MI means 70% and 30%. Can you allocate 2,50,000, 70%, 30%? बोलो 1,73,000, 75, 75,000, 75,000. Then 1,05,000 and 45,000. However, this is not required. If you want to write, write. If you don't want to write, don't write. I will say don't write, because if you write, you will do some mistake. So this is not required. We require this, this, this and this. I will say don't calculate also, because when you calculate now, you use the information. Means you will use it somewhere. So don't calculate only. Are you able to understand? If you want to calculate, calculate, but don't use that information in subsequent working note. Correct. Now we'll do working note number 3. What? Goodwill, or means normally you call it cost of control. I think you write down cost of control, na? But this is nothing but calculation of goodwill, or if you want to write down COC, cost of control. ICI is writing cost of control. But what is cost of control? We are calculating goodwill or capital reserve, na? This is calculation of what? Goodwill or capital reserve. Okay? But what will be our PC? PC means cost price of investment. Already I have given how much I have given? For how much percentage? 70%. From this will minus what? Will minus 70% of fair value of net asset. 70% of fair value of net asset. But on which date? On the date of acquisition or on the date of consolidation? Means you will take 1,75,000 or you will take this amount. 1,75,000. So this is 70% of net asset on the date of acquisition. So this will come from this to this. Understood? Are you able to understand? अरे बोलना रही. Not able to understand? हाँ, तो raise your hand. अच्छा, this you have understood. Now, this you have understood. This is the net asset on the date of acquisition. This is net asset on the date of acquisition. This is net asset on the date of consolidation. And this is the post-acquisition profit. This you understood. Now, for goodwill capital reserve, we want net asset on the date of acquisition, net asset on the date of consolidation. We are calculating goodwill capital reserve on the date of acquisition, on the date of consolidation. On the date of acquisition, it means we want net asset on the date of acquisition. So you will take 2,50,000 ki 4 lakh. This is date of acquisition. This is date of consolidation. 1 second, please listen carefully. Listen carefully. Think and say. Whatever I am saying, try to understand. 1 second. We calculate goodwill capital reserve on the date of acquisition, ki date of consolidation. Date of acquisition. When you are acquiring control. So it means to calculate goodwill capital reserve, we want net asset on the date of acquisition, on the date of consolidation. On the date of acquisition. Means for us, this 2,50,000 is relevant. If 4 lakh is relevant, 2,50,000. Now, for goodwill, you want 70% of net asset, 100% of net asset, 70%. So 70% we calculated now 1,75,000. Therefore, we'll minus 1,75,000, and this become what? Your goodwill. Goodwill is how much? 1,25,000. Understood? Correct. What you used to do, I will say. What your teacher has said. Your teacher has said like this. Working note number 3. They will say cost price of investment 3 lakh less equity share capital 1 lakh into 70%, 70,000. Then pre-acquisition reserve and surplus, how much we have taken? 1,50,000 into 70%, how much? 1,50,000 into 70%, how much? 1,05,000. What is the total of these two? However, you don't do total. You to write down here only. 70,000 minus यहाँ से and 1,05,000 minus यहाँ से. And then what is the answer? Same answer is coming or not? You have done in this way now. Correct? But can you say this is to rectification? This is not concept. Why you are deducting equity share capital? Why you are deducting pre-acquisition reserve? This is net asset on the date of acquisition. So basically we want net asset on the date of acquisition. When you are deducting equity share capital, pre-acquisition reserve, sometime you will be confused ki why we are deducting. And thoda sa alteration in the question, you will die. Means if fair value adjustment is given, sometime we are confused what is this. Correct? So this is nothing but same thing now. You have also taken 1,75,000. I have also taken 1,75,000. But is it properly designed format? And you will never do mistake in this. You will never do mistake in this. Got this point? Now, if you want to follow this, I can follow this also. What is your choice? Means if you want to follow my method, I will follow my method. If you want to follow your method, I will do as per you. Because I know that also. My method chalega na? Everyone is saying? Pakka? Pakka? Because I know that is easy. And that will save you from small mistake also. Got this point? So, isko kaat do. Now have you understood why we deducted 1,75,000? Got this point? Up to this. Chalo. Abhi aage aur chalna hai. This much you understood? So it means our next concept is what? Analysis of profit and time adjustment. Analysis of profit and time adjustment. So if the parent company has acquired equity shares of subsidiary company during the year, then profit earned by subsidiary company will be allocated between pre-acquisition profit and post-acquisition profit. Correct. If actual information about profit earned during pre and post-acquisition profit is not given, means that information is not given, what is the actual profit earned during pre and post. or cannot be calculated, and profit of subsidiary company will be allocated between pre and post period on the assumption that profit of subsidiary company has been earned uniformly throughout the year. Hence, profit of subsidiary will be allocated on time basis. So normally in exam, they will never give actual profit of pre and post. Therefore, always will allocate in which ratio? Time ratio. Correct. And the same format I have given. Understood? This you have understood? Chalega. Any doubt? No doubt? Now, I am changing the question. Write an example. Example. One 2020, 31st March. Okay. And on 1/1, 70% was acquired at rupees 5 lakh. Okay. Then equity share capital. These are all our information of subsidiary company, 1 lakh. Then PL, they will give 1 lakh. Suppose they have given 1 lakh and 3 lakh. And they have given general reserve also. General reserve they have given 70,000 and 1 lakh. Got this point? Chalega? Understood? Now they have given one abnormal loss. Abnormal loss happened during pre-acquisition period. Some abnormal loss happened. Understood? An abnormal loss is of 30,000. So this is one adjustment they have given. They will try to confuse you. So one new adjustment game. Chalega? So we are moving to concept number 4. Okay, sir? Correct. Question done. Now, first we'll prepare what batao? Analysis of profit. So now we have 2 reserve and surplus. So we'll have 2 columns. So what we write down? PL and general reserve. Correct. We write down closing balance close. CB means what? Closing balance is what? 3 lakh and 1 lakh. And opening balance is what? 1 lakh and 70,000. So what is the profit? Profit of the year is what? 2 lakh and 30,000. Yes or no? So any increase in general reserve is also profit earned during the year. Yes or no? Any increase in general reserve is also profit earned during the year only. This too you are able to understand now. Correct. But can you see this profit? You say this profit is after abnormal loss or before abnormal loss? This is profit after abnormal loss or before abnormal loss? After abnormal loss, because this is already recorded. So this become after abnormal loss. Understood? Now abnormal loss happened in which period? So can you assume that abnormal loss occurred uniformly throughout the year? So that is wrong assumption. Something is given, some information is given that you need to apply now. It is already given, it is occurred during which period? Pre-period. So what we'll do? First we'll find out profit before abnormal loss. So we'll add back what? Abnormal loss. We'll add back in PL now. So 30,000 will be added. So this will become what? Profit before abnormal loss. It become profit before abnormal loss. How much? 2,30,000 and 30,000. And now we should apply time ratio on this. We should apply time ratio on this. Bole yes or no? Correct. So how to write down? We write down pre, then we write down post. And in post we have 2 columns, PL and general reserve. थोड़ा सा format change होगा, but concept remain same. Concept remain same. Understood? Correct. Now, can you say first we'll find out allocated profit? allocate profit. Can you allocate 2,30,000 in which ratio? Which ratio? No, time ratio I am saying, not 70:30. This is how many months? 9 months. This is how many months? 3 months. The pre-period is what? 9 months. 3 months is what? Post-period. So 9:3. 9:3 now. So can you allocate this in 9:3? Allocate kar. 1,72,000. 1,72,500 and 57,500. This is how much? 9:3. 22,500. 7,500. Means can I say this become post, this become pre, this total become pre? So can you give me the total of 1,72,500 plus 22,500? How much? 1,95,000. Understood this yellow one, yellow color, or you can do allocation यहाँ पर भी, your choice. ठीक है? And PL post is what? 57,500. And generally the post is what? 7,500. Have you understood it? Huh? Total is not required. Why not required? I will say. Have you understood this? You can do total if your choice, but not required. Have you understood this? So can you say we have allocated the profit in pre and post? In pre and post. Got this point? Any doubt? Now this is profit before abnormal loss ki after abnormal loss? This allocated profit is before or after abnormal loss? But can you see we want profit after abnormal loss? So 1 second will deduct what? But first you can add opening balance, but the opening balance will be added to what? Pre ki post? Pre. So this 1,70,000 will be added to what? Pre. So we can add 1,70,000 to pre. You can add an opening balance in 1 lakh plus 70,000. Are you able to understand? And now we should do minus abnormal loss also. So minus abnormal loss, but I will do deduct abnormal loss from pre-period ki post-period? Pre-period. Because this occurred during which period? Pre-period. To entire 30,000 will be deducted from pre-period. Entire 30,000 deducted from pre-period. Understood? And now this become the allocated profit. So what is pre and what is post? Batao. Post to is not, no adjustment. 3,35,000. Understood? Have you understood? Have you understood? Understood why we first added abnormal loss, then deducted abnormal loss? To find out allocated profit for pre-period and post-period. For pre-period and post-period. Understood? Suppose in this question, abnormal loss was occurred during post-period. Then we would have deducted from what? Post-period. Means can you say deduct abnormal loss as per the date of occurrence from pre or post as per the date of occurrence. As per the date of occurrence. Got this point? Means it may be deducted from pre, it may be deducted from post as per the information given in the question. Chalega. After this, what will prepare about the working note number 2? Statement of net asset. So we write down date of acquisition, date of consolidation, and post. And post. Date of acquisition is 1/1. This is 31st March. So this is 3 months. But what is equity share capital? 1 lakh and 1 lakh. There is no change. And we can add reserve and surplus as per previous working note. So how much pre? 3,35,000. How much post? In post we should add in 2 columns. How much PL? How much general reserve? So how much PL? 57,500. How much general reserve? 7,500. Are you able to understand? Total is what? Understand? This came there. This came here. And this came here. Are you able to understand? Total is what? And what is the closing balance of reserve and surplus? Check karo. This should be always equal to closing balance of reserve and surplus. Correct. Now can you give me the total? Total is what? It is 4,35,000, 57,500, 7,500 and 5 lakh. Now we'll allocate in parent company and minority interest 70% and 30%. Can you allocate? Give me amount. 3,04,500, 1,30,500, then 40,000, 250, 17,000, 250, 5,250, 2,250. Understood? Correct? Okay. This you have understood. Now we'll prepare which working note? Working note number 3. COC, cost of control. That is nothing but goodwill or capital reserve. Batao. What is the cost price of investment? That is nothing but PC. For how much percentage? 70%. How much? I have given 5 lakh. But from this, what you will deduct? Less share of fair value of net asset na. Net asset of subsidiary company. 70% only. How much? Which amount? Don't see previous answer. How much? Means you are saying this amount na. 3,04,500 will come यहाँ पर. 3,04,500. Understood? Correct. So what is goodwill? 1,95,500. Understood this? So I am extending the working note now. This much you have understood. Working note 1, 2, 3 you understood. Now let us come to 4 and 5. This 5 working note plus one more working note coming. 6 working note is the benchmark of this chapter. If you have understood 6 working note, any question you can do. But the main out of the 6, the super working note is AOP. If you have understood AOP, then balance working note is very simple. Means balance working note is substitute from what? Means that is derived from AOP only. If AOP is wrong, all working note is wrong. And mostly students do mistake where? AOP only. So AOP is the first working note. Now, after this, can you say we need working note number 4, minority interest also? But we want minority interest on the date of acquisition or on the date of consolidation? On the date of consolidation means we want as on 31st March 2021. Correct? So can you see this become minority interest on the date of acquisition? 1,30,500 is the MI on the date of acquisition or not? Okay, so we write down MI as on the date of acquisition is how much? 1,30,500. And can you see if in this we add this two, so this will become what? am I on the date of consolidation? यही तो है. Means this working note was not required. We could have calculated from here only, but we required as per IC solution a separate working note because each working note will carry marks. Understood what I am saying? So we write down plus share in post acquisition PL. Write down post acquisition PL. How much? 17,250 plus share in post acquisition general reserve. How much? 2,250. तो 19,000 ना total बताना लायक. Total means all total. 1,50,000 is the MI on the date of consolidation. This will come in CBS. This figure will appear in CBS. Understood? So can you see you have used this, you have used this, you have used this, you have used this. What is left? This is left now. So this will come in the last working note. Means can you say this all figures will go to subsequent working note. So AOP, then SONA is an advantage to you because SONA will make this chapter easy. Normally we delete SONA. Means if you see ISA solution, they are also not preparing SONA, and most of teachers are not preparing SONA. But once you prepare SONA, this chapter become very easy. This chapter become very easy to understand what will go where, what will go where. Understood? The last working note. Working note number 5 will prepare consolidated reserve and surplus. Means this consolidated reserve and surplus will come in consolidated balance sheet. So we have PL and general reserve. So first we'll take balance from parent company balance sheet. But this information I have not given now. This will be from the balance sheet of parent company. This I have not given the question. But in your exam question, this will be there. You will take from the parent company balance sheet. Parent company balance sheet. This you can take now. Okay. In this will add what? Share of post acquisition profit of subsidiary company. तो बताओ how much PL? 40,000, 40,250. How much general reserve? Understood why we require separate? Understood why we require separate? Because general reserve will go to general reserve, PL will go to PL. Understood? So this is 5250, and this total will come in the consolidated reserve and surplus, but we can't do the total because the opening balance we don't know. Means the balance of parent company we don't know. Understood? Done. 5 working notes I have explained. Only 1 working note is coming soon. There are 6 working notes. Then small point that is additional. Any doubt in this working note? Because I will now increase the adjustment of AOP. Abnormal loss I have explained. Have you understood abnormal loss? So first add abnormal loss to find out profit before abnormal loss. Then allocate the profit pre and post. Then deduct abnormal loss from pre or post as per the rate of occurrence. Understood? This is the only concept. Can you read this? Read this fast. Concept number 4. Read fast. Done. Same thing I have said. Format understood. So after each adjustment I have given format so that you can revise. Where to plus, where to minus. Understood? Okay. Next, can I come to next concept? Okay. Means I am increasing AOP difficulty. Okay. Now next example. Means I will not give you the concept. I will help you from example only. You'll be able to understand why we are adding, why we are deducting. Okay. Correct. This is 1/4. This is 31st March 2021. This is 20. ठीक है ना? And suppose this is 38 September. Date of acquisition, date of consolidation. ठीक है? Suppose 80% acquired. If I write down every time 70%, I will think 70% only. 80% acquired at rupees 5 lakh. Then they have given equity share capital, profit and loss account, general reserve. Okay, correct. This to normally they don't give. This is suppose 2 lakh. Then PL is given 2 lakh and 5 lakh. General reserve they have given 1 lakh and 1,50,000. Okay, 5 lakh. This is 5 lakh. 80% at 5 lakh. Now, okay. Okay. Now, abnormal loss is given, suppose 20,000, but during which period? That is given post. Abhi it become easy. In exams, it is given as an additional information. You need to find out whether it is pre, post. So when I am drawing timeline, the question become easy. Okay? Then they have given one more information. New adjustment. Means suppose this is 30th September. Na? Suppose this is 110, yeah, 111. 111. The final dividend means dividend of previous year, paid in current year, paid in current year. Final dividend paid by subsidiary company. Yeah? Every information related to subsidiary company. ठीक है ना? 20% paid on 111. Understood? Correct? Now थोड़ा सा concept. पहले तो AOP समझ लेते, then I'll come to the concept. Up to this any doubt? But I think the question to you understood. Only a new adjustment, final dividend paid. Final dividend paid. ठीक है? Okay? चलो. So first AOP, let us do. Working note number 1. AOP. What do we write down? PL and general reserve. Then we write down closing balance how much? 5 lakh and 1,50,000. 5 lakh, 1,50,000. Then opening balance given how much? 2 lakh and 1 lakh. Okay. So this become profit. Profit is coming how much? 3 lakh and 50,000. One thing is clear, this is profit after abnormal loss. So we'll add back what? Where we'll add back? But no, like it is, I mean, right now there is no pre-post. It is PL and general reserve. Post will come after allocation. Pre-post will come after allocation. Na? Abhi tak we have not allocated. So we want profit before abnormal loss for allocation purpose. So we'll add in PL or general reserve? PL only. PL, na? Are you able to understand? But first we want profit before abnormal loss. Then we'll do allocation. Means allocate profit before abnormal loss. Okay. So how much will be added? 20,000 will be added. Now my question, next question was, this too you have understood. This is concept number 4. Now my question is that this profit is profit after dividend ki before dividend? After dividend. But whenever you are allocating profit, you want profit, net profit earned means before dividend. So once again we'll add back what? Dividend. We'll add back dividend. Understood? We'll add back dividend. So plus final dividend paid. Final dividend paid. It is 20% of what? 20% of 2 lakh is what? 2 lakh is what? I am saying 2 lakh is what? Equity share capital. Equity share capital, na. So 20% of 2 lakh means this capital, and this will be same only. This will be same. Correct, na? Very good. I was thinking you are saying two of this. Therefore, I asked. Means I should be clear now whether you have understood or not. So this is 2 lakh is equity share capital of which company? Subsidiary company. Very good. Excellent. So 20% how much? So 40,000 you have added. So this become how much? 3 lakh 60,000. And so now this is available for allocation. Now we can allocate. Now we can allocate. Understood? So allocate. So we write on pre. We can write on post. In post we write on PL and general reserve. Can you give me allocated profit? You'd give me. If you want to allocate in this way. PL and general reserve. PL, first allocate PL pre and post. It is the ratio is what? It is 6:6. You have drawn timeline na? 6:6. Okay? So half कर दो. It will be 1,80,000 and 1,80,000. Understood? General reserve will be what? 25,000 pre and post how much? 25,000. Understood the presentation? Have you understood? Correct. Then in this we'll add opening balance. Opening balance, how much opening balance batao? So opening balance is 2 lakh plus. So you should add all because that will be added to pre only. So we'll add 3 lakh. Here you can show this is 2 lakh plus 1 lakh. Correct. Understood. Then minus abnormal loss from where? Post. Post na. How much minus? 20,000 minus from post. PL. Minus from PL. Understood. Correct. Understood. Now you only say this profit is before dividend ki after dividend? But we want profit after dividend. Correct. Now just try to understand a concept. This dividend has been paid in current year, but for which year? Previous year. Previous year means this is what? Pre-acquisition profit, post-acquisition profit. This is pre-acquisition profit. So this dividend has been declared from pre-acquisition profit. Therefore deduct from pre-acquisition profit. Therefore deduct from pre-acquisition profit. So any dividend which is declared from pre-acquisition profit will be deducted from pre-acquisition profit. Understood? So it means this 40,000, 40,000 will add a minus final dividend paid. We write down 40,000 is deducted from pre-acquisition profit because this is declared from pre-acquisition profit. Understood? If it is declared from post-acquisition profit, then deduct from post-acquisition profit. Have you understood this point? Are you able to understand? Have you understood? Yes, sir. So, batao how much? 4,65,000, 1,60,000, 25,000. Understood? So your AOP completed. This is the main working note. Understood? After this, you prepare. I am giving you 5 minutes, not more than that. Because after this 5-minute job, prepare working note number 2, 3, 4, 5. Means first Sona, then goodwill capital reserve, then MI, then consolidated reserve and surplus. Do by your own. But how many minutes? So you should be very much fast. Do mistake chalega, but fast. Increase your speed. Understood? Do mistake chalega, but increase your speed. Live student, are you able to understand Just write a message so that I can understand you are also able to follow me. Live student, just write down, yes sir, we are able to follow you. Everyone, I want message from everyone. Perfect sir, yes sir. Live student, sometime you give me some compliment also so that I become happy. Yes sir, you are very good. Yes sir, you are teaching very good. Yes sir, you are best. Yes sir, we love you. After 20 minutes, then also. Are you doing now? Don't discuss. Please, no discussion. Once you discuss what happened, it means you are not able to understand. Do by your own. Mistake are good, but before exam. All working note done. Do all working note. Hmm? Chalo. You want me to do Sona? Sona, everyone done? तो working note Sona. So I think Sona to everyone done correct only. Date of consolidation post. In post we write down PL and general reserve. बताओ. How much equity share capital? 2 lakh and 2 lakh. Okay, sir. Then how much reserve and surplus as per previous working note? 4 lakh 65,000, 1 lakh 60,000, 25,000 total, 6 lakh. Now, can you give me the total? It is 6 lakh 65,000, 1 lakh 60,000, 25,000, 8 lakh. Correct? Now you'll allocate in which ratio? I have not given. I have given now. Parent company and MI 80% and 20%. Can you allocate? This 6 lakh. ठीक है. This if even though wrong, it is not required. But चलो नहीं. You write down correct only. I am saying. But you only said 6 lakh. You said I have written. ठीक है चलो. Okay. But this column is not relevant from exam point of view. Okay? If you have done mistake in date of acquisition post, then mistake will happen. Are you able to follow me? Correct. Now 80%. Can you give me 80%? 5,32,000. 1,20,000. 33,000. Then 1,28,000, 32,000. Then 20,000 and 5,000. I will suggest never calculate this, huh? Never. Because if you will calculate, you will do something. Okay? Now, this working note, I think everyone has done correct. Anyone have done mistake? No mistake. Now, just try to understand. This will go to what? You say. Which working note? This will go to COC. This will go to what? Consolidated reserve and surplus. This will also go to what? Consolidated reserve and surplus. And all these three will go to what? MI. Understood this point? This point you have understood. So let us start. Working note number 3. Cost of control. You have done. So cost of control. Batao. What is the cost price of investment? 5 lakh. For how much percentage? This always you write down. Otherwise you will do mistake. Okay, na? Then minus. Can you give me what is the share of fair value of net asset? How much you require? 80% only required. How much? 30. Now it become what? Capital reserve. Now it become capital reserve. 32,000. Understood? Add. Pre-acquisition. I am coming to that. Good job. Intensely I have not said. Everything if I'll explain together, you will die. Okay, na? I am a teacher. Let me do as per teacher point of view. Okay, na? Working note number 4 is what? Minority interest. Okay. Okay. So what is on the date of acquisition? Batao. 1,33,000. In this you will add share in post acquisition PL, or you can add on total 32 and 5. You can add on a 32,000 and 5,000. Add on separately only in exam. Total is what? 1,70,000. Then working note number 5 also you can do consolidated reserve and surplus, PL and general reserve. The balance from parent company to not given. I'm writing question mark. And plus you'll do post acquisition profit Share in post acquisition profit. How much? How much? 1,28,000 and 20,000. Okay, sir. Done. Up to this, any doubt? No doubt. No doubt. Chalo, read these once. Concept number 5 you read. Any doubt? 1 lakh. Why it will be in PL? What is the doubt? This will go. This 1,28,000 will be transferred to PL of parent company. So this is PL of parent company, which I have not given. This is consolidated reserve and surplus. So this will be added to the PL of parent company. This belongs to parent company, so it will be added to the PL of parent company, and this will be added to the general reserve of parent company. Got this point? But this information I have not given, so therefore I have written question mark. Okay. In exam, this information will be there. So just you read, go through this. Concept number 5. Read. Same thing. So this concept is same for final dividend and interim dividend paid. Even though interim dividend paid concept remains same, but in exam normally I have seen they are not asking interim dividend paid. They are only asking what? Final dividend paid. So till now we have not got any question of interim dividend paid. Suppose in your exam came, so don't worry, apply the same concept. Concept remains same. So you have understood why we are adding dividend paid. Then less dividend paid from the as per the source of dividend. Means if declared from pre, to deduct from pre. If declared from post, then deduct from post. Okay. Then one note I have given at the end, that any dividend declared by parent company is not relevant for this chapter. So suppose in the question they have said dividend declared by parent company, okay, it is already recorded. So that no adjustment is required for that. Means all adjustment we are doing only for subsidiary company. No adjustment we are doing for parent company. Parent company adjustment will be done only when there is some error in the books of parent company. So if there is some wrong treatment done in the books of parent company, that will be adjusted. Correct? So any dividend declared by parent company is not at all relevant for this particular chapter. Got this point? Chalega. Correct. Now one is special point. We are coming to concept number 6. Now dividend paid by parent company, subsidiary company will be received by parent company. It means this final dividend paid by subsidiary company will be received by parent company. How much? 80%. 80% will be how much? 32,000. Now the accounting treatment of these is as per AS 13. As per AS 13. Now what AS 13 says, try to understand. What AS 13 says about dividend received. About dividend received. So they say these are of two types. One is pre-acquisition. One is post-acquisition. Pre-acquisition means dividend declared out of pre-acquisition profit. Post-acquisition means dividend declared out of post-acquisition profit. So any dividend declared out of pre-acquisition profit is deducted from cost price of investment. Means what will be journal entry for this? Bank account debit to investment account. This you know in AS 13. But any post-acquisition dividend received means any dividend declared out of post-acquisition profit, if received, that is your income, and that income will be transferred to PL. That income will be transferred to PL. So this is bank account debit to what? dividend income, and this will be transferred to PL of parent company. PL of parent company. So any pre-acquisition dividend will be deducted from cost price of investment. Any post-acquisition dividend receipt will be transferred to PL account of parent company. Understood? Correct. And can I say, just try to understand, ki in the books of parent company, this entry is already done. Already done means thank you very much. But in exam, they will confuse you. They will say whatever dividend received has been transferred to PL. So suppose they have said it has been transferred to PL. So this is to correct. But this is wrong now. Pre-acquisition dividend received is transferred to PL. So that become wrong treatment. It means there is some error in the books of parent company that need to be rectified or not. That need to be rectified. I hope you are understanding. So suppose they have given the dividend received by parent company has been transferred to PL. So in this question, dividend was pre-acquisition dividend and that has been transferred to PL. So that become wrong treatment. It need to be rectified before preparing consolidated financial statement. Before preparing consolidated financial statement. Understood? Are you able to understand? Are you able to understand what I am saying? So suppose in the last question, it is given that dividend is wrongly credited to PL account. It means one adjustment is required or not. So you rectify, but what will be the rectification entry? What will be rectification entry? So can you say it has been, this is the correct entry, but it has been transferred to PL. So what will do? What journal entry will do below? PL account debit to what? Investment account. So we'll pass one journal entry, PL account debit to investment account. To investment account. Correct? With 32,000 as per our question. As per our question. Means this will be adjusted in consolidated PL. Means your consolidated PL will decrease by how much? 32,000. And this will reduce from the cost price of investment. This will reduce from cost price of investment. So your entire working note will change or not? Your entire working note will change. Are you able to understand? Correct. Now out of 10 questions, 9 questions they will say dividend received is wrongly created. But in one question will say dividend is correctly recorded. Can it say correctly recorded? Then no adjustment. Yes or no? Correctly recorded, then no adjustment. Wrongly recorded, then adjustment. Are you able to understand what I am saying? Are you able to understand? So in the last question, if I have said nothing, it was correctly or wrongly? Correctly recorded only, therefore I have done no adjustment. So if it is wrongly recorded, they will inform you now. So normally in exam, they will inform you it has been transferred to PL account. It means wrongly recorded. But if nothing is said, it is correct treatment. By your own, you will not assume now. By your own, you will not assume it is wrongly treatment. You will assume it is correctly recorded only. I hope you are understanding. I hope you are understanding. So one more adjustment will come for any dividend received which is declared out of pre-acquisition profit. If it is wrongly credited to PL account, one rectification entry will do, and the rectification entry will be PL account debit to investment. Correct? I'll give one question based on this. First read this. Concept number 6 read. Treatment of dividend received by a parent company from subsidiary company as per AS 30. If dividend received is declared out of pre-acquisition profit of subsidiary company, bank account debit to investment. If dividend is received, if dividend is declared out of post-acquisition profit of subsidiary company, dividend received is credited to PL of parent company. Okay? Bank account debit to dividend income, and dividend income will be transferred to PL. Attention! If parent company has correctly recorded pre-acquisition dividend received in his SFS, then no adjustment is required for consolidation. Have you understood this point? Understood? If the parent company has wrongly credited pre-acquisition dividend, this spelling is mistake, dividend received to his PL account, then following rectification entry should be recorded before consolidation. That is, dividend income will be debited, means PL will be debited to investment, reduced from consolidated PL and reduced from cost price of investment. Understood? Chalo, one question I'll give. Now, I am giving you two data, 2 year. Means it can be 2 year, but till now we have given 1 year only. Now I am giving you 2 year. Thoda sa more interesting. Can I increase the level? 1/4, 31st March, 31st March. This is 20, 21, 22. But this is the date of acquisition. This is the date of consolidation. Okay. And they have acquired 70% at rupees 5 lakh. Now they will give me equity share capital, PL. Let's say general reserve also. General reserve. So they will give you, suppose they have given you 1 lakh. They have given you here 1,50,000. And then they have given you 50,000. Correct? This is the question mark. This is also question mark. Means this information is not given in the exam. They should give, none, they have not given. So assumption need to be done. Assumption is applied. And suppose they have given 50,000. Okay. So if the general reserve opening balance is not given, always will assume what? Equal to closing balance. Always assume equal to closing balance. Are you able to understand? You can't assume nil. You can't assume nil. This is general assumption. You can't change this assumption. Are you able to understand what I am saying? Have you understood this point? So I have not given general reserve. So it means it is equal to what? Closing balance. Suppose in this question the PL I have given, but suppose PL is also not given, then opening balance of PL will be nil. This is the assumption. Means if opening PL is not given, then it will be nil. If opening other reserve and supply is not given, that will be equal to what? Closing balance. This is a general assumption. You can't change this assumption. If you are changing this assumption, your solution will not match with IC solution and they will give anda. So there are some rules. I said rules you need to follow. So what is the rule? Ki opening PL is not given, then it is equal to nil. But any opening other reserve and supply is not given, then equal to closing balance. You can't say, ask me why. General assumption, you need to follow this only. Chalega. And this will be always equal to 1 lakh. This you have understood. Correct. Now, in this question, simply I have given the date of acquisition is the beginning of the year only. Therefore, no time adjustment required. Because entire 2 year is what? Post acquisition period. So this entire 2 year is post acquisition period. Now what happened? Final dividend paid yahan par at the rate of 10% and final dividend paid yahan par bhi at the rate of 12%. Understood? Correct? Understood? And on dividend received, is credited to what? PL account. Is credited to PL account. La. Become perfect question. Chalo, can we do? Can we take? Yes, sir. So let us start. You have written the question? So let us start. First, we'll do what? Working note number 1, AOP. If you have understood this now, most of the point you have understood. Now we can move to the next concept. Concept wise. Okay, na? Okay. After that, two important concepts left. One is pay value adjustment, one is bonus share. If that two we have done, we can do any questions. Then there are some small point that I can discuss like this only. So two major adjustment, fair value adjustment and bonus shares. After that, all questions you can do by your own if you have understood that this much. Okay. Correct. AOP. So we write down PL, general reserve. But the closing balance how much? Closing balance 1,50,000 and 1,50,000 and 50. Opening balance 50 and 50 and 50 now. This will be equal to what? Closing balance. Therefore, profit, how much? 1 lakh and 0. Then plus will do what? Plus final dividend paid. But there are two final dividend paid. Achha, this is paid for which year? This year. Correct. This is paid for which year? This year. This much you understood. So 10% plus 12%. So 22% of how much? 1 lakh. So we can say 22% of both will be added now. So I can add on directly 22,000 or you can add on separately also. Your choice. It's 10,000 and 12,000 separately. No abnormal loss I have given in this. So this will be what? 1 lakh 22,000 and this is nil. Now we'll allocate pre and post. In post now we have only PL. In post we have only PL. So can you allocate? Allocated profit will be what? Can you entirely post? This 1,20,000 is entirely post, means it is profit for 2 post year, 2 post year. So entirely post. Correct. Then we'll add opening balance. Opening balance is what? 50 plus 50. How much? 1 lakh. Are you able to understand? Then minus final dividend how much? Minus करेंगे final dividend paid. Final dividend paid how much? From where? Means 22,000 is what? Dividend. But out of that 10,000 declared from pre-acquisition profit and 12,000 declared from post-acquisition profit. Understood this point? You can see this 10% is from this profit. This is pre. But this 12% is from this year profit, which is post. So it means 10,000 deduct from pre and 12,000 deduct from post. Understood this point? Are you able to follow me? Very rare. This type of question, rare. They will not ask, but they can ask. Chances are rare, but they can ask. Have you understood this point? 10, 12. 10, 12 you understood? So this become the allocated profit. 1 lakh, sorry, 90,000 and 1 lakh. Please use calculator, bhai. Why you purchase calculator? देखो, wrong amount. I can become angry, but you will lose 6 months. One mistake, your 12 marks question become 0 marks. Just try to understand that situation. In my exam, so 1 plus 1 also I do in calculator. It is 2. Check kar lo bhai. 6 months is important or smart? Just try to understand. One small mistake, your entire paper will be worst. Don't do that type of mistake. 1 lakh 10,000. Okay, now understood. Any doubt in AOP? No doubt. Now working note number 2 is what? Sona. Date of acquisition, date of consolidation and post. So date of acquisition is 1/4/2020 na? And 31st March 2022. So this is 2 years. Can you give me equity share capital? 1 lakh and 1 lakh. Then can you give me reserve and surplus? This is 90,000 and 1,10,000. Total is, always check this total should be equal to closing balance. If it is not coming closing balance, means you are doing mistake. Check kar lo. Coming 2 lakh na. You can understand you are doing correct. There is no calculation mistake. So always cross check this is equal to closing balance or not. Okay. Sometimes we do plus minus mistake na. plus become minus and minus become plus. So you can cross check here only whether you are doing mistake or not. Okay, sir? Yes, sir. So now it become what? 1,90,000, 1,10,000 and 3 lakh. Correct? Now allocate in 80 na ki 70? I have given how much percentage? 70%. So 70 and 30 allocate kar do. 70% and 30%. One lakh 33,000 and 57,000. Then 77,000 and 33,000. This you don't write. Then Sona also done. Correct. Now, only for your understanding, I am writing working note number 3. This you don't. This is not required in exam if you have understood. But there will be one rectification of dividend received. Yes or no? So how much dividend paid by subsidiary company? How much dividend paid by subsidiary company? How much? Correct. How much received by parent company? Received by 22,000 only. No, 70% of 22,000. 70% of 20,000. How much? Correct. Understood. Now I am asking some questions. Think and say. Think and say. How much pre-acquisition dividend received by parent company? So dividend. Are we reading? So we need to find out how much pre, how much post. So can I say from this we can understand this is dividend declared out of what? Pre, and this dividend declared out of post. Yes or no? So 10,000 ka 70% is what? 10,000 ka 70% is dividend received from pre-acquisition profit, and 12,000 ka 70% is what? 8,400. Okay, this should be transferred to PL, and this should be deducted from, this should be reduced from investment account as per AS 13, but both has been transferred to which account? PL account. Means this is correctly recorded, so no adjustment. This is wrongly recorded now, so only adjustment is required for 7,000. Only adjustment is required for 7,000. Are you able to follow me? Are you able to follow me? Are you able to follow me? Everyone is not saying yes, sir. I am waiting. Means everyone need to say. Means you are saying yes, sir, because I am asking. Okay, chalo. Now, simple word. In exam, don't think it this way. Simple word. Always take this 10,000. Whatever you have deducted this now, this is what 70%. So you will never do mistake. Yes or no? Means you don't consider for that adjustment entry this 12,000 because that has been declared from what? Post acquisition profit. So there is no need to do this working note. 10,000 or 70% how much? 7,000. So what is your rectification entry? PL account debit to investment with what amount? 7,000. Understood? Understood? Have you understood? So this working note is not required. This I have done only for your understanding. If you want to do, if you can do directly, chalega. So now will come next working note. Working note number, I am not writing this as a working note. So next working note is 3 only. That is cost of control. Now bolo, what is the cost price of investment? And can you say now we should reduce it? Yes or no? So we'll pass one adjustment entry to write of minus pre-acquisition dividend received 7,000. So this become what? 4,93,000. And this is nothing but carrying amount of investment as per year 13. This is nothing but carrying amount of investment as per year 13. So you require this from balance sheet. But that was wrongly calculated, means that was wrongly accounted, therefore we got 5 lakh. So we have corrected it. And now same thing, minus what? Share of fair value of net asset. How much percentage? 70%. This is also 70% only. Kitna? That is 1,33,000. So what is goodwill? How much? 3,60,000 goodwill. Look. This adjustment have you understood? But this is only when wrongly created. 90% question it will be wrongly created to invest PL account. But suppose they have been correctly recorded, then no adjustment. Only I will say in CA Inter, one time they have asked that question. He correctly recorded. Okay, that become more dangerous because now you are be habituated of this. You will be habituated of this now. So when wrongly created, then only this adjustment. If correctly recorded, then no adjustment. Okay, sir. And only for dividend declared out of pre-acquisition profit, not out of post-acquisition profit. Okay, sir. Now working note number 4. MI. What is as on the date of acquisition? As on the date of acquisition, how much? Bolo. 57,000. In this you'll add what? Share in post-acquisition. Post-acquisition profit, how much? How much? 33,000. So this total become how much? 90,000. Then working note number 5. Consolidated reserve and surplus. PL and general reserve. Balance I have not given once again. Balance you will take from the balance sheet of parent company. But now one second rectification. Because PL will be also adjusted. We will add a minus pre-acquisition dividend received. Correct, because in this it is already added now. 7,000 already added. That is wrongly created to PL. So we will minus what? 7,000 minus 7,000. Two effect. Deduct from investment and deduct from PL also. Correct. Then we'll do plus share in post acquisition profit. Share in post acquisition profit. Share in post acquisition profit. How much? 77,000. So add 77,000. Nothing will be added to general reserve and this becomes the total. Total you can do once the balance is given. So this was a new point. Have you understood this new point? Okay. Chalega. Simple. Just read this also. Read this. This concept number 6 you have read up to this now. After that also you read. Now you will be able to understand. Okay, sir. You want break? Huh? You want break? Because after that, one concept, important concept I will do. I require concentration. Huh? 10 minutes, but take 10 minutes only, okay? I will start immediately after 10. और टुडे आई विल थोड़ा सा टीच यू मोर, ठीक है ना. तो हैव रिलैक्स बिकॉज आई नीड टू कंप्लीट कंसोलिडेशन, then there are some accounting standard also, okay, but there are small accounting standard, it will not take much time, okay. Consolidation will take major time, okay. So we'll take 10-minute break. चलो, कैन वी स्टार्ट? चलो, कैन वी स्टार्ट? चलो, तो विल स्टार्ट द नेक्स्ट कॉन्सेप्ट, कॉन्सेप्ट नंबर 7, fair value adjustment of assets and liability. Now, one thing we have understood that right now, whatever question we have done, in that fair value of assets and liability was not given. Correct? It means we have assumed that book value of net asset is equal to what? Fair value of net asset. But of course, fair value information will be given. And we need to find out fair value of net asset. So, how to find out that fair value of net asset, that we are understanding, and what are the adjustment for that, that we are going to understand. Okay, sir. Let me create one example. Can I create one example? Suppose this is the 1/4/2021, 31st March 2022, and the date of acquisition is 38th June. 70% acquired at 5 lakh. This is the date of acquisition. This is the date of consolidation. Then they will give you equity share capital. Suppose they have given 1 lakh and they have given PL. PL they have given, suppose 1 lakh and 1,50,000. Okay, sir? 1,50,000. This all information are same as whatever we have done till now. Okay? Got this point? Chalo, one more adjustment I'll give. Final dividend paid to practice ho jata. कि final dividend paid at a rate of 15%. Final dividend paid at a rate of 15%. ठीक है? If I say by both company, final dividend paid by both company, so only what is relevant? Subsidiary company relevant. Parent company is not at all relevant. Understood this point? Are you able to understand? Now, one more adjustment they will give. They will give you plant and machinery. Plant and machinery. Okay. Are you able to understand? And they will give you the closing balance of plant and machinery 90,000. Correct. And they will give you rate of depreciation 10%. Rate of depreciation 10%. They will not give you opening balance. They will not give you opening balance. They may give also opening balance, but normally they will not give you balance sheet on the date of on this date. Correct now. And they will give you on the date of acquisition the fair value of plant and machinery is equal to 1,25,000. 1,25,000. Understood? Fair value of plant and machinery is what? 1,25,000. 1,25,000. Got this fine? Have you understood? Correct? No doubt? Chalo. So working note number 1, AOP, so you have understood, so you can prepare AOP whatever we have done till now. That much so you can do. So prepare fast AOP, working note AOP. Leaving about plant and machinery. You have understood AOP now. So whatever we have done up to concept number 6, you can prepare AOP. Do AOP in how many minutes? How many minutes? 5 minutes you want? 7 minutes. The 5 minutes. Do 5 minutes. Start. Because you need to be now fast. Don't think go with the flow. Go with the flow. Prepare AOP fast. Everything is given. Now we are also practicing. Means don't consider plant and machinery anything. Plant and machinery I will explain. Suppose one more point, dividend received is dividend received transfer to PL. Okay, means wrongly credited to PL. One more point I have added, because that also concept we have done. Na? Dividend received is wrongly credited to PL. Only AOP. Don't do Sona, nothing. Only AOP I want. Let's see who is doing first. One chocolate. Whoever is doing first, correct first. Huh? Whoever is doing correct first, one chocolate. Live student, if you are doing first, give me the answer. I'll give chocolate to you. Virtual chocolate. Means I will GPay you. After this, we can take 2 questions of exam. Means up to this, we can take 2-3 questions of exam. Means normally up to these questions are asked in exam. Then one bonus years will do. Normally they are not asking bonus here, but we'll do it. And then one unrealized profit is there that we need to do. Then chapter over. Then only SOPL will be left. Don't listen me. Chocolate is there, chocolate. Done? Well, answer. Pre is how much? Pre is how much? 1 lakh. Pre is 1 lakh. Post is how much? 50,000. One answer I got this. You also say. So both are equal. So if it is correct, I'll give chocolate to both of you. This might be wrong also. Huh? Don't tally your answer with this. Change. Answer change. 1 lakh and 32,500. Answer change. I said prepay AOP with allocation. AOP means full AOP. Huh? I don't know which one is correct. Oh my God. 1 lakh 250 33,750. One answer I got from live student, that is also different. 1 lakh 1,250 and 48,000 48,750. Chalo, let's see. 4 answer I got. Now stop. 4 option is there. Can I do? Means till now not understood. Perfection not came. Some more. 1 lakh, this 1,16,000. 1,16,000. 250. 750. Chalo, let's see. Means one thing is that perfection not came. Means for perfection more and more questions required. And though nothing to worry. Perfection will come. Aega. It will come. Don't worry. Okay. So nothing to panic even though your answer is wrong. Because I am not in panic situation. Okay. Chalo. Can we start? Now only identify your mistake. Working note number 1. AOP. We write down PL. Only PL I have given. Closing balance how much? Opening balance how much given? 1 lakh. So it is what? 50,000. Whether abnormal loss I have given? No. Only what I have given? So plus final dividend paid. So it is how much percentage I have given? 15% of what? 15% of 1 lakh. That is how much? 15,000. So total become 65,000. Correct. This will be allocated to pre and post. What is the time ratio? Allocated profit. Allocated profit. It is time ratio 3:9. 3:9. So 3:9. How much? 16,250 and 48,750. Then we'll add opening balance how much? 1 lakh will be added. 1 lakh will be added. Then minus what? Final dividend paid. How much minus final dividend paid? 15,000. From pre ki post? From pre na? From pre. What is the answer? 1,01,250 and 48,750. Very good. Whether we got this answer? So this, how many of you done this? 2 chocolate and 1 live student chocolate. Live student, you just Google Pay, you just WhatsApp me your Google Pay number. Huh? So my number is 7731007722. WhatsApp me your number in this. Okay, I'll just GPay you. And your just debit me in your account. Chocolate receivable. Okay, you'll get it. Don't worry. But those who have done mistake, have you identified your mistake? One by one. One by one, I'll ask what mistake you have done. Follow. Either. Ratio mistake. Oh my God. Blunder mistake. This type of mistake, God can't save you. Means I will say this is blunder mistake. Lack of concentration. Coming here, thinking about parents. Okay. Okay. So this is the blunder mistake. What other mistake you have done? I'm just identifying what is blunder mistake, what is concept mistake. Blunder mistake, I can't help you. Can I help you? I can't help you. Ratio. Blunder mistake, I can't help you. So what you have done? Why? So this is conceptual mistake. I will help you. So this is final dividend paid. Paid after acquisition, but final dividend is for previous year, na? It is paid for which year? Previous year. And previous year which profit? Pre-profit ki post-profit? So it is declared out of pre-acquisition profit. Therefore deduct from pre-acquisition profit. Last question. Dekho, I have given 2 dividend intentionally. Ki 1 dividend was for previous year and 1 dividend was for post-profit. So 1 dividend we declared deducted from pre-acquisition profit and the second dividend we deducted from post-acquisition profit. Intentionally I have given that question so that concept will increase. Got this point now? Have you understood? Any more mistake? This side first. Understood mistake? Now you'll never do this type of mistake. Well, God promise will not do this type of mistake. God promise. Mistake. Where? Same mistake. Final dividend deducted from where? From where you have deducted? Deducted not. This is lack of concentration. You know, but you have forgotten it. You know, na? But you have forgotten this. Lack of concentration, huh? Mistake. You have not done only. Why? Why you have not done? You came only class. You were there, na? You were there, na? Acha, okay, gone for break, long break. Long break with long drive with someone. Don't, right now, class is very important. Please. You are not able to understand. Lunch is not important. Breakfast is not important. What is important? Whether I am moving from this classroom, 10 minutes, whether I have went outside. Try to understand. For me, you are important. For you, I am only important. This khana wana after becoming CA, you will go to 5-star hotel, 7-star hotel, 9-star, London, everywhere you will go. Understood? But first become what? CA. Breakfast is not important. Lunch is not important. Dinner is not important. Study is important. What is important in your life? Study. Are you able to understand what I am saying? Focus on study. You are not able to understand. More and more pain, more and more gain. Take more pain. You realize more gain. Less pain, no gain. Life is this only. Start taking pain. Mistake. Understood? Now next time, please don't do this mistake. Okay? Please, I am saying, requesting. Okay? Chalo. Blunder mistake to no one can save. Okay? Now, coming to the next point. Now, can you see this become what? Your pre-acquisition profit, and this become your post-acquisition profit. Can you see this will be added to the date of acquisition, and this will be added to the post-acquisition profit in Sona. In Sona. Means statement and asset. Now let us come to working note number 2, which is new adjustment, that is fair value adjustment. Fair value adjustment. So can you say, just try to understand, but before that, if I prepare Sona, working note number 2, if I prepare Sona, so Sona mein what we write down? Date of acquisition, date of consolidation, and post. We write down equity share capital, how much? 1 lakh and 1 lakh. And then we write down reserve and surplus. Reserve and surplus, how much we got? 1 lakh, 1,250 and 48,750. Total become 1 lakh 50,000. So can you say this is what? This is coming how much? 2 lakh 1,250, and this is 48,750, and this is 2 lakh 50,000. So can you say this is carrying amount of net asset? This is carrying amount of net asset. But we want fair value of net asset. It means if the fair value of asset has increased, so we should add something. So you can see one information has been given that fair value of PP on this date is how much? 1,25,000. Correct? It means if you want to find out fair value gain and loss, how much increase, how much decrease, you should compare fair value with the book value of asset on that date. But what is not given? Book value is not given. So we need to first find out book value. So you can see opening balance of plant and machinery also not given. So opening balance also not given. But what is given? Closing balance. So this is 90,000. Can you see this is 90% of opening balance? Because rate of depreciation is what? 10%. So 100 minus 10 is 90. So can you see closing balance is 90% of opening balance. So we can find out opening balance. So opening balance will be 90,000 divided by what? 90%. That is equal to what? 1 lakh. And can you say in this 1 lakh, if I will charge 3-month depreciation, we'll get the book value of what? Plant and machinery on the date of acquisition. On the date of acquisition. So what is your working note? Just try to understand. We'll do fair value adjustment. So leave some space. Leave some space. Fair value adjustment. Fair value adjustment for PP. So what is the fair value of property, plant and equipment on the date of acquisition? Batao. 1,25,000. But we want book value of PP on the same date. So first we'll find out opening balance. Opening balance we calculated 90,000 divided by 90%. If not given, if given, they will take opening balance. If not given, we are doing back calculation. Back calculation. It is coming 1 lakh. But we want on the date of acquisition. On the date of acquisition means on 30th June. Na? On 30th June. So 3-month depreciation will be charged on this. will deduct depreciation for how many months? 3 months. So it will be 1 lakh into what? 10% for how many months? 3 months. It will come how much? 2,500. What is the book value on the date of acquisition? 97,500. 97,500. Correct. It means your carrying amount has been increased. Your book value has been increased by what amount? So what is the fair value gain? What is the fair value gain? Means what is the increase in the value by asset? 27,500. 27,500. Understood? Means can you say this is the increase on the date of acquisition or on the date of consolidation? This is increase on the date of acquisition or date of consolidation? Date of acquisition. Means can you say this should be increased by what amount? 27,500. So we'll add 27,500. Understood? Is fine. We'll add 27,500. Are you able to understand? Are you able to understand? So can you say once you have added, this will become fair value of net asset on the date of acquisition. So we want fair value of net asset on the date of acquisition only. Got this point? This much, any doubt? How much it is coming? 2,28,750. 2,28,750. Any doubt? This calculation is very easy. I think no doubt. Thoda sa I have just not given you opening balance intensely. Means I have given a good question to you directly. But normally they will give you book value only. Suppose they have given big book value on the date of acquisition, then very easy. They have given opening balance, then also very easy. If they have given closing balance, back calculation. Got this point? Correct. Now, second point of this. This much you understood? Second point. Now listen carefully. Now just try to understand, everyone. This is the timeline. So can you say for this post acquisition period is 9 months. Can you say subsidiary company has charged depreciation on 1 lakh? Means subsidiary company has already charged depreciation of how much? 1 lakh into 10% into 9 by 12. So how much? 7,500. So can you say subsidiary company has already charged depreciation on opening balance of what? 7,500. But now if parent company has acquired that asset at 1,25,000, the parent company will charge depreciation on what amount? 1,25,000. It means, can I say, in the consolidated SOPL, we need to increase the depreciation due to fair value gain. Due to fair value gain, there will be some additional depreciation due to fair value adjustment during which period? Post acquisition period. And additional depreciation will reduce what? Post acquisition profit. We reduce your post acquisition profit. Understood? It means you are asking something. It means, can you say we need to also calculate additional depreciation for which period? Post acquisition period. So with this is the fair value adjustment you have understood. Now we'll say additional depreciation. Additional depreciation. But this will depend upon whether it is SLM or whether it is RBM. RBM is WDB, yeah? SLM or RBM. Means right now I have given 10%, but I have not given SLM or RBM. Means it can be SLM in your question, it can be RBM in your question. Correct? If SLM, then how to calculate? If SLM, then your additional depreciation, this is additional, huh? Additional depreciation will be, what is the gain? 27,500. What is the rate of depreciation? 10% into what? 9 by 12. Why 9 by 12? Post acquisition period. This become your additional depreciation. How much? 2,000. 20. 3 कर दे 2063 approximation, rounding off 2063. ठीक है, तो कहीं से SLM तो you have understood कि the fair value gain multiplied by rate of depreciation into post acquisition period, correct? But in RBM will not do in this way. So in RBM what we'll do कि first we'll find out कि parent company will charge depreciation on which amount. So parent company will charge depreciation on 1,25,000 into 10% into 9/12. How much? How much? 9375. So can the parent company should charge depreciation on fair value, but subsidiary company has charged depreciation on which amount? 1 lakh on 1 lakh opening balance na. So 1 lakh into 10% into 9/12. How much? 7,500. So what is the additional depreciation? So additional depreciation for post acquisition period is what? 1875. This is as per RBI. So this difference you need to understand. Understood? Have you understood? So whenever SLM, to calculate depreciation on fair value gain directly. But whenever RBM, the first calculate depreciation which will be calculated by parent company on fair value, then minus depreciation which is already charged by subsidiary company on opening balance. Or we can say in this way, if you say a formula become fair value minus opening balance into rate of depreciation into post period divided by 12. We can say in this way. So we can do it this way. But the fair value is what? Minus what? What is the rate of depreciation into what? 9/12 is equal to. So you can apply this formula directly in exam. Or if you want to understand concept, this is concept. Understood? SLM RBM. Correct. Correct. If question is silent, suppose they have given only 10% and they have not given SLM RBM. So you'll apply SLM or RBM? No, always RBM. If question silent, always RBM. This is general assumption. You can't change. If you are doing SLM, 0 marks, under marks. Okay. RBM, always RBM, because this is only correct. Why correct? Abhi I will not explain because that will take another 1 hour. This much you are understanding? If question is silent, suppose they have given only 10%, they have not given SLM RBM, so always RBM. RBM you have understood? So can you say, if suppose we are following RBM, so can you say this much will be reduced from post acquisition profit? So we'll do minus what? From this 1875 minus 1875, and this will be your post acquisition profit. How much? And this is why deducted from post acquisition profit? How much? 46,875. This become your post acquisition profit. Understood? So can this become your fair value buying? This become your fair value buying, na? Fair value of net asset, sorry. Fair value of net asset, and we want fair value of net asset on the date of acquisition. Got this point? So can you say fair value gain will be added on the date of acquisition column, and additional depreciation will be reduced from post acquisition profit. Got this point? Have you understood concept why we are doing so? Why we are doing so? Have you understood? Chale. You have written this much? Written this much? Now don't write whatever I'm writing. Okay, na? Achha, can we write down this in this way? Suppose if I don't write in this way, Sunna, what I will do? I will add the fair value adjustment in AOP only. So I will do plus minus fair value adjustment. So what is your fair value gain? So again, that will be added to pre-acquisition profit, because on the date of acquisition is pre-acquisition profit, that will increase your pre-acquisition profit. How much? How much? 27,500. And your additional depreciation will reduce your post-acquisition profit. So how much? 1875. So this become how much? One lakh 28,750 and 46,875. Understood? Correct. And this will go to Sona. So we add on 1,28,750 and your post acquisition profit is 46,875. So बताओ your answer remains same or not? What is now your answer? 2,28,750 and 46,875. Your answer remains same. Means either you do fair value adjustment from Sona or AOP, your answer remain same. ICI is doing with AOP, so I will also suggest do with AOP only. However, to understand concept, I need to explain from Sona why I am changing carrying amount to what fair value. That is concept. So now we'll do in this way only to match with ICI solution, because we can't take risk in exam. Correct now? Whatever they are doing, we follow that. So we'll also do adjustment with what? AOP. But understand why we are doing? To convert our carrying amount of INA into what? Fair value of INA. That is the concept. Got this point? Means when you come to final now, I will say do with Sona. But I CA interm will follow what? ICI solution. ICI solution, because we can't take risk. Because who will explain them? That is more dangerous. Got this point? I think you are also doing with AOP. You have also done with AOP only. Your teacher had done with AOP only. Correct? It means, can I say in this way? Ki this fair value gain, what is the journal entry? PP account debit, PP will increase to pre-acquisition profit, and pre-acquisition profit will also increase. So in the balance sheet, PP को increase करो, and in AOP pre-acquisition profit will also increase. Okay. What is the journal entry for this? Can you say post-acquisition profit will decrease? Post-acquisition profit will decrease to what? PP. In balance sheet, PP will be reduced by depreciation. So in CBS, we need to also do adjustment in PP. So with the fair value gain, PP will increase, and with additional depreciation, PP will decrease. So that is the second effect of this transaction. So your balance sheet will tally. Understood? Have you understood? Correct? Any doubt? No doubt. Additional depreciation, have you understood? So additional depreciation, if rate of depreciation SLM, then what is the formula? Fair value gain into rate of depreciation into post acquisition period. But whenever it is RBM, what is the formula? Fair value minus opening balance into rate of depreciation into post acquisition period divided by 12. Chalega? Understood? Now, suppose whatever question I have given in the previous question only, fair value on the date of acquisition is suppose 80,000. then your answer will change. Your answer will change now. Let us do. So only I am doing now fair value adjustment. So what is the fair value of PP? 80,000. Okay, the book value will remain same as we calculated. No. Book value on the date of acquisition. Book value on the date of acquisition will be how much? 97,500. So 97,500. Now it becomes fair value loss. Now it becomes fair value loss. So it becomes fair value loss. It means how much? 17,500. So can you say fair value loss will be deducted from pre-acquisition profit? So what will be your journal entry? Batao. Pre-acquisition profit will be reduced to what? Your PP will be also reduced by what? 17,500. Correct. Understood. Now can you say subsidiary company would have charged depreciation of 1 lakh, but parent company will charge depreciation of 80,000. It means now there will be some saving in depreciation. Means we'll save some depreciation because depreciation will be on reduced amount now. The subsidiary company has charged depreciation more amount, and parent company will charge depreciation on less amount. So there is some saving in depreciation. So now we'll calculate some saving in depreciation. So saving in depreciation will be how much? Saving in depreciation. But if SLM, then what? If SLM, then what? Bolo. 17,500 into what? 10% into what? 9 by 12. How much? 1,000. 1313. If RBM, then what? But what is the fair value? What is the opening balance? Opening balance. Be careful. Opening balance. 1 lakh into what? 10% into what? 9 by 12. How much? 1,500. Without the saving in depreciation will increase your post-acquisition profit or decrease your post-acquisition profit? Will increase your post-acquisition profit? Will increase. So what journal entry will do? PP account debit to what? Post-acquisition profit. Understood? Means can I say this will reduce from pre and this will be added to post now. Added to post. Understood? Correct? So there can be fair value gain, there can be fair value loss. 90% time they will give you fair value gain. 10% time they can give you fair value loss, and there is a high chance of the mistake if you are not concentrating. Understood? Fair value adjustment also you understood? Correct? Now, depreciation means calculation of additional depreciation. Thoda sa interesting point that depends upon the information given in the question. Now, what are the types of information given? Just try to. First, they may give you rate of depreciation. Rate of depreciation. So rate of depreciation can be based on SLM or it can be based on RBM. So this to I have already explained. This to already I have explained. So if rate of depreciation is given, already I have explained. Correct. Sometimes they give remaining useful life. Means they will not give what? Rate of depreciation. They will give remaining useful life. Can I say if remaining useful life given, then we can't apply RBM. We can only apply what? SLM. So whenever remaining useful life given now, then only one formula is what? Whatever fair value gain or loss you have calculated divided by what? Remaining useful life into your post acquisition period. You can find out what? Depreciation. Suppose post acquisition period is 9 by 12 to 9 by 12. This will be your additional depreciation. Then your formula will be what? Fair value gain or loss. Fair value gain or loss divided by remaining useful life into post acquisition period, whatever is given. Understood? Correct? Have you understood this point? Correct? Suppose nothing has been given, neither this is given nor this is given, then ignore what? Ignore depreciation adjustment. Then ignore depreciation adjustment. Then you can't assume rate of depreciation. Then ignore depreciation adjustment. This type of question can be asked, therefore be careful. Be careful. Understood? So once, if rate of dep is given, then SLM you know, RBM you know. If question is silent, then RBM. So if question is silent, then RBM. Correct? But if remaining useful life is given, then only SLM. You can't apply RBM. Then you can't apply RBM now. Then only SLM. And if nothing is given, ignore depreciation adjustment. Ignore depreciation adjustment. All questions I have covered. All questions I have covered. Now with this, I can take one exam question. Can I take? Let's see. You'll feel thoda sa confidence now. Chalo. Question 35. This was an exam question of which attempt? They got 20 marks. 20 marks. Now 20 marks question will not come, 14 marks. Because previously when there was no MCQ, they used to ask 20 marks question. But now 14 marks. Same question will come for 14 marks. Okay? Read. On 31st March 2020, the summarized balance sheet of H Limited and its subsidiary S Limited stood as follows. Read it. Read it, read it, read it. The following information is also provided to you. H Limited purchased 19,200 shares of S Limited on 1st April 2019 when the balance of reserve on 1st April 2019. Correct? When the balance reserve and surplus and PL account is 60 and 36. Machinery book value 2,40,000. Furniture book value 48,000 of S Limited were revalued at 3,60,000 and 36,000 respectively on 1st April 2019. Understood? For the purpose of fixing the price of a share, rate of depreciation computed on the basis of useful life machinery, but they have given rate of depreciation. If nothing is given, then RBM. RBM. Correct? On 31st March 2020, bill payable of rupees 12,000 shown in S Limited balance sheet had been accepted in favor of H Limited. So this will be cancelled in CBS. This is intercompany balance. Bill payable, bills receivable will be cancelled. Understood? So you can see. Understood? So of course 12,000 will be cancelled. You are required to prepare CBS. Only this much. Only one adjustment they have given. One adjustment they have given. Okay? Now let us do. So how to do it? Working note number 1. Working note number 1. First we'll calculate holding ratio. Holding ratio. Correct. But the parent company, how many shares they have acquired? 19,200. Out of how many shares? Check karo. What is the total share? 2,40,000 divided by 10 means out of 24,000. Correct. So you'll do 19,200 divided by what? Into 100. How much percent? 80%. So what is your MI? 20%. First working note is this. Then working note number 2 will be date of acquisition and date of consolidation. Always identify. What is the date of acquisition? 1st April 2019. It is given. Given na? Given the question. They have acquired on which date? 1st April 2019. And what is the date of consolidation? It is 31st March 2020. So 31st March 2020. This you identify. Means one thing is created. Post acquisition period is 12 months. Post acquisition month is 12 months. Understood? Now working note number 3. I will suggest you first do fair value adjustment because that will go to AOP. First we'll do fair value adjustment. Correct. So they have given two items for fair value adjustment. What are the two items? They have given machinery and furniture. Machinery and furniture. So write down machinery and furniture. So we'll write down first fair value. How much fair value given? Bata. Fair value is given how much? We are revalued to 3,60,000 and 36. So write down 3,60,000 and 3,60,000 and 36,000. And they have given book value also. Thank you very much. Direct book value given. No back calculation required. So book value given how much? 2,40,000 and 2,40,000 and 48,000. In one we have gain, in other we have loss. So fair value gain oblique loss. Gain is how much? And 12,000 is loss. Understood? In this only we'll calculate depreciation adjustment. Depreciation adjustment. So we'll do depreciation adjustment for both machinery and furniture. So what is the rate of depreciation given? Check karo. It is 10 and 15. 10 and 15. So batao. For machinery, what will formula? What is the fair value? And what is the opening balance? Opening balance is also 2,40,000 only. Because in this opening date is only date of acquisition. Into what? 10%. For how many months? 12 by 12. How much? 12,000. 12,000 is what? This is additional depreciation. So this you can add on in minus. So that you can, because this will minus from what? Post acquisition profit. If this is plus, so this will be always minus. Understood? And then for furniture, what is the fair value? 36,000. What is the opening balance? 48,000. Into what? 15%. Into what? 12 by 12. How much? 1,800. This you can add on plus. Understood? And you can add on net amount. But what is the net amount? This will be net amount will be on the date of consolidation. Net amount will go to balance sheet na. Net amount will go to balance sheet. So how much? 1,20,000 minus 12. 1,08,000. This is plus. And 12,000 minus 1,800. How much minus? 10,200 negative. Understood? Have you understood this point? This working note you understood? This working note you understood? Now we'll come to working note number 3. AOP 3 na. This is same working note. Acha 4. Ha. 4. Working note for AOP. So AOP mein what they have given? They have given how much reserve and surplus? They have given reserve and surplus and PL account. We write down PL account and reserve and surplus. Write down reserve and surplus and PL account. So can you give me first closing balance? But the closing balance will take from balance sheet. So closing balance will take from balance sheet. Balance sheet mein how much? Subsidiary na. So 1,80,000 and 60. 1,80,000 and 60. We will take 1,80,000 and 60. Correct. Opening balance will take from additional information. Opening balance will take from additional information. So additional information, let us go. How much given? It is reserve and surplus 60 and PL how much? 36. So 60 and 36. 60 and 36. Okay, sir. Okay. Batao. This become profit. Profit how much? 1,20,000 and 24,000. Okay, sir. Okay. Nothing like this. Okay. Any abnormal loss given? No adjustment. Any dividend paid given? No adjustment. Abhi we have done two adjustment like this. Okay? Two adjustment. So no adjustment. This will be allocated to what? Pre and post. And entire is post only. because entire 12 month is what? Post. So no allocation required, entire is post. Then but then write down pre, post, in post write down reserve and surplus and PL. Are you able to understand? So write down allocated profit. So allocated profit will be entirely what? So 1,20,000 and 24,000. Then we'll add what? Opening balance, one by one, step by step. Opening balance will be added. Opening balance will be added where? Pre ki post. Opening balance will be entirely pre. So opening balance total is what? 60 plus 36. 60 plus 36, 96,000. Are you able to follow me? Now there is no abnormal loss, there is no dividend. Now we can do fair value adjustment in AOP only. Do in AOP. So plus minus fair value adjustment. Correct. But the first for machinery, na? Machinery. Machinery, what is gain? 1 lakh? No, gain. 1,20,000. This will be added to pre. This is deducted from post, not net amount. Are you getting? So 1,20,000 will be added to what? Pre. 1,20,000 will be added to pre. And how much deducted from post? 12,000. Depreciation, na? But you will deduct from reserve and surplus or PL? PL only. PL. That is the understood point. So 18,000. Achha, sorry. This will be my mistake. This will be added. Huh? So how much? 12,000. Na? So 12,000 negative. This will be added and this will be deducted. Then for furniture, batao. There is a fair value loss. How much fair value loss? Fair value loss. 12,000. So 12,000 deducted from where? Pre na. And how much saving in depreciation? So that will be plus ki minus? Plus. Very good. 1,800 will be plus. Understood? Have you understood? Correct. If in this question abnormal loss, dividend also given, then also you could have done. This to become very easy. Yes or no? What is the total? 2 lakh, 4,000, 1,20,000, 13,800. 13,800. Any doubt in AOP? Any doubt in AOP? Now we'll do working note number 5. Oh, Sona is for your comfort, huh? Because we require sleep, na? Post, in that write down reserve and surplus and PL. Batao. How much equity share capital from balance sheet? Balance sheet of which company? No. Everything is for subsidiary company. Holding company you take only in balance sheet. Nothing of holding company forget in working note until there is error. Chalega? Yes, sir. So equity share capital how much? 2,40,000. So it will be same na. 2,40,000 and 2,40,000. Then we write down reserve and surplus total pre. But the pre is what? 2,04,000. Post is what? 1,20,000 and 1,38,000. What is the total? I was thinking about someone. I have also someone in my life. 13,800. Someone is my wife, Ray. You are thinking about what? Bata. बोलो टोटल बता दो Have you understood this total? 2 lakh 800. Okay, but how 2 lakh? Whether you are doing without calculator. Calculator has some mistake. How it is possible? 3 lakh. Everyone will say, how can I understand? 800. Okay. Now can you give me the total? 4,44,000. 1,20,000. 13,800. This is what? 5 lakh 800. Done. Now can you allocate? What is the ratio? 80% and 20%. Allocate. Three lakh 55,200. Then 88,800. Then 96,000. 24,000. Then 11,000. 040. 2760. Now which working note? Cost of control. Means goodwill or capital reserve. Okay. What is the cost price of investment from balance sheet now? Which balance sheet? Parent company balance sheet. This will to from parent company balance sheet how much? 3,84,000. Write down 3,84,000. For how much percentage? So write down minus what? Share in fair value of net asset. 80%. How much? Amount. 3 lakh. Means you will take this now. You will take this now. This will be transferred यहाँ पे 3,55,200. Goodwill or capital reserve? How much goodwill? Huh? 28,800. Done. Then working note number 8 is what? Minority interest. But how much as on the date of acquisition? How much as on the date of acquisition? 88,800. In this we'll add plus share in post acquisition reserve and surplus. How much? 24,000. Then plus share in post acquisition PL. How much? 2,760 total. 1,15,560. 1,15,560. Okay. Last working note. Working note number 8 or 9? Chalo 8. Consolidated reserve and surplus. So we have reserve and surplus and PL. So first we'll take balance from where? Balance of which company balance sheet? Parent company or holding company balance sheet. Correct. That now is given. So let us take reserve and surplus. How much? 4,80,000 and 2,40,000. 4,80,000 and 2,40,000. This we have taken from parent company balance sheet. In this add what? Post acquisition profit. Post acquisition profit as per working note. It is 96,000 in reserve and surplus now. And 11,014 PL. Can you give me the total? $5,76,000 and 2,51,040. Now it will be a CBS. Can you prepare CBS? चलो CBS बनाएंगे. I'm doing without format. Format you know ना? Format you know? चलो. Can we start? CBS. So first we write down share capital. I'm not drawing with format, huh? Format you know. Share capital. So share capital. Now it will be what? Only this equity share capital. Don't add as limited, huh? Only assets and liability are taken over. Reserve and surplus and equity is not taken over. So it is only equity share capital of H Limited. 13,40,000. Okay. Then we write down reserve and surplus. So reserve and surplus as per this working note. So it will be 5,76,000 plus 2,51,040 total. There can be some capital reserve also, so be careful. Abhi I know it is goodwill. So if that is capital reserve, that will also come under reserve and surplus. Okay. Okay. How much total? 040. Then we write down minority interest as per which working note? 7. You can write down working note number 7. 1,15,000. 1,15,560. Correct. Then liabilities. The liability is what? Book value plus minus adjustment. Whatever adjustment is given. So only adjustment for machinery and furniture. There is no other adjustment. And there is one bill payable and bills receivable cancellation that you need to retain. Okay, so let us do fast. Now 12% debenture. So can you no adjustment will come 1 lakh. So I am writing only 12% debenture. Okay. 12% debenture 1 lakh. Then what is given? Trade payable. It is book value plus book value. How much? 2 lakh plus 1,22,000. So trade payable will come 3 lakh. Achha, bills payable is not given separately. It is given separately na. So we'll cancel with that. So 2 lakh plus 1,22,000. How much? 3,22,000. Then we have what? Bank overdraft plus 1 lakh only. But in exam with format, it will come under short-term borrowing. So that format you need to be very careful. Then we have bill payable. Bill payable will come under trade payable only. So it will be cancelled. It is coming how much? 60 plus 14,800. How much? 74,000. 74,800 minus what? It is given 12,000. So 12,000 minus how much? 62,800. Done. All liability done. Can you give me the total? 28 lakh 67,400. Okay. Can we move? Now I'll come to asset side. So first we write down PP. So it is given machinery, or we can write down directly PP. So we write down BP. So PP will be book value plus minus adjustment. That fair value adjustment, correct? So can you give me these two book value total? Total of these two is how much? 8 lakh, sorry, 9, 10 lakh. So 10 lakh 80,000 plus how much? These two book value? 2,56,800 plus pay value adjustment. So can you say machinery was increased by what? Can we come to this? Can you say we can click net amount? So machinery has net amount only after depreciation. So machinery has increased by 1,08,000 and furniture has decreased by 10,200. So in CBS with net amount, plus 1,08,000 minus 10,000. So plus 1,08,000 minus 10,200 now. Minus 10,200. How much? 14,34,600. Got this point? Have you understood? PP. Then goodwill will come. Means intangible asset as per working note. Whatever. 28,800. So goodwill will come under intangible asset. You in balance sheet data intangible asset you prepare notes to account. ठीक है ना? Format you do. Format I am not teaching. ठीक है? Okay. Yes. Goodwill done. Then after that investment will not come. Investment कटा करा हाँ there can be some other investment that will come. So suppose some investment is given यहाँ पर तो other investment will come. Then inventory, trade receipt, inventory, book value plus book value how much? So inventory will come 8 lakh. No adjustment is there. Then trade receivable also no adjustment. Can you give me book value plus book value? Achha, you don't have the question. So it is 3 lakh plus 90,000. How much 3 lakh? 90,000. Then BR also book value plus book value, but there is one adjustment. So 1 lakh plus 30 minus 1 lakh 30 minus 12,000. How much? 1 lakh 1,18,000. चलेगा. Last cash and bank balance will be book value plus book value. 56 plus 40 how much? 90. देखो balance will tally. Check कर लो. Balance will tally. It will tally. So for 40 marks easy now. Only practice. Practice you are doing to this chapter is very easy. If you are doing practice. Okay. Means I have seen they are not asking difficult with what 4-5 attempt apart from SOPL question. If they are asking CBS, they are not asking difficult question. Means with more adjustment. They are asking 2 or 3, maximum 2-3 adjustment. Correct. Means either they are asking dividend and fair value, not more than that. Abnormal also till now they have not asked. Bonus also they have not asked in exam. Correct. So let us take one more question for practice if you want. Can we take? Can I take one good question? This question you can do by your own because this is nothing but only one adjustment. What? Achha, in this dividend is also there. And you want me to do so I can do. But this you practice by your own. In this what they have given dividend is correctly recorded. Oh, correctly. I said now only one time they have asked correctly record dangerous. Correctly recorded means now no adjustment for that pre-acquisition dividend. Correctly recorded. Dangerous na? Are you able to understand what I am saying? But once you are conceptually strong, you can do it. You want me to take one good question? This is with bonus share. This is also with bonus share. Chalo, let us do first bonus share, then I'll take one good question, okay? तो बोनस शेयर में आ जाते ना. बोनस शेयर देखो, बोनस शेयर विद बोनस शेयर नाउ कंफ्यूजन विल इंक्रीज इफ यू आर नॉट लिसनिंग केयरफुली. ठीक है? आर यू एबल टू अंडरस्टैंड? नाउ bonus share, what is journal entry? Okay, journal entry is reserve surplus account debit to equity share capital. This is the journal entry. Means with bonus share, one equity will decrease and other equity will increase. Means your net asset remains same. Means can I conclude that bonus shares will not change the net asset? Yes. bonus share will not change the net asset because bonus share is without consideration. So your net asset will not neither increase nor decrease. Neither increase nor decrease. Understood? Correct. Now, bonus shares, what is the treatment? Bonus share declared by which company? Subsidiary company. Now there are two type of question. One is bonus share declared but no journal entry made by subsidiary company. And bonus share made and journal entry is made by subsidiary company. Understood? Correct. Now in bonus share no journal entry is done. So what is shortcut? Ignore that adjustment and your answer will be correct. Shortcut is what? Ignore entire bonus share adjustment. Means forget that it is given the question. Your answer will be correct. So if bonus share journal entry is not made by which company? Subsidiary. Ignore the adjustment entirely. Just write down one note in your solution. Since bonus share journal entry is not made, it will not affect the net asset of the company. So net asset not affected, and we want net asset only. So no adjustment. Understood? Super easy. Super easy, na? So bonus share information given and it is not yet recorded by subsidiary company. No adjustment required. Ignore that adjustment. But if journal entry is done, then so you should do. Then some adjustment is required. Correct. Now what adjustment required, that I need to explain. Correct. So write down one example. Example write down. Suppose this is 31st March 2020. This is 31st March 2021. Equity share capital, and this is given 1,50,000. NPL 1 lakh and 2 lakh. And general reserve, it is 1 lakh and 70,000. Okay. This is the information of which company? Subsidiary company. Then I'll give you some additional information. Write down point number A. On 1/4/2020, parent company has acquired 70% of equity shares of subsidiary company at rupees 5 lakh. Okay, sir? Okay, sir? Point number B. On 30th June, subsidiary company has declared final dividend at a rate of 10%. Dividend received is credited to PL account. Means wrongly credited, because of course this will be pre-acquisition dividend. The final dividend means previous year profit. Correct. Point number C. On 31st March 2021, S Limited has declared bonus shares in the ratio 1:2. Means for 2 equity share, 1 bonus share is given. For 2 equity share, 1 bonus is given. out of pre-acquisition general reserve. Out of pre-acquisition general reserve. And if nothing is given, the journal entry has been done. If nothing has been given, means journal entry has been done. Correct? Okay. Achha, better you write on here. They have acquired 7,000 equity shares. Don't write down 70%. Okay. And here write down face value is equal to 10. Face value is equal to 10. Now what a difficulty in this concept? Because once this concept is thoda sa conceptual, means a lot of understanding. Correct? Till now whatever we have done, I hope you have understood. Now only practice required. More and more practice, more and more understanding from exam point of view. Means you will get confidence from exam point of view. But here a lot of concepts are there. Now just try to understand first whether this capital is after bonus share, before bonus shares. It is after bonus shares. Correct? But they have acquired 7,000 equity shares. This is including bonus share, excluding bonus shares. Excluding. Now first you need to find out holding ratio. So can you do 7,000 divided by 15,000? No. Dangerous. Super dangerous, because this is excluding bonus shares, this is including bonus shares. First dangerous, you understood? Because I have not given holding ratio. If 70% is given, so okay. So due to bonus share, your holding ratio will never change. So before bonus shares and after bonus share, your holding ratio remains same. It means first difficulty is what? Working note number 1 will be what? Holding ratio. And here you need to be very careful. So first working note is holding ratio. So your holding ratio of parent company. Can you see if you are taking 7,000 yahan par? So this should be before bonus share, total number of shares. Total number of shares being before bonus shares. So 15,000 is after bonus share. Correct? Means if you are holding 2 shares, we are giving you 1 share. So now it becomes 3 shares. If you are holding 2 shares, so we are giving you 1 more share. So now it becomes 3 shares. It is 3 now. We want 2. So if this is 3, what is 2? That we need to find out. So what will do? 15,000 into 2 by 3. How much? So your before bonus is what? 10,000. Means ratio is what? 70%. Are you getting what I am saying? Means 7,000 by 15,000 most of the student will do who is not able to understand. And here only mistake happened. First mistake, now 0 marks. Or can we do in this way? Or we can say 7,000 plus bonus share. So bonus share will be half. Means plus 3,000 divided by what? Your holding ratio will remain same. Check karo 70% will come. Means either you do this calculation or you do this calculation. In both 70% will come. Got this point? So this is the first point where you can do mistake. If bonus is jana entry not done, super easy. Ignore. Then you'll never do method. That is super easy. If bonus is jana entry not done, ignore it completely from your question. Don't think about bonus here, your answer will be correct. Shortcut. Only write down one note. If bonus is jana entry not done, ignore because it will not affect the net asset of the company. They will be able to understand your feeling. Are you able to understand? Yes. Now, what will be MI? MI is 30%. Correct. Now, working note number 2, what will do? AOP. 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 So we write down PL and general reserve. What is the closing balance given? Batao. Closing balance is how much? 2 lakh and 2,70,000. And opening balance is given how much? 1 lakh and 1 lakh. 1 lakh, no? So what is the profit coming? It is 1 lakh and negative 30,000. Now you will be scared how it is negative. Don't worry. Negative is coming, write down negative. Nothing to worry. Okay. Understood? Now I have given two adjustments. One is dividend, one is bonus share. The first dividend, do you know? So we'll do plus what? Final dividend paid. Final dividend paid. So what is the rate of dividend? 10% of what? 10% of 1,50,000. बोले या सुन बोलो. This is the second mistake. Sunna. I said there are three dangerous points. One to I have explained. Now this is the final dividend of which year? Previous year. Previous year there was no bonus share. But understood what mistake we can do? So it should be of 1,50,000 minus what? Bonus here, that is 50,000. Okay, half. Correct now. So we can do in this way. 1,50,000 into 2 by 3, how much? It is 1 lakh now. So it should be 10% of 1 lakh. Here, so be careful. Be careful. Be careful. Understood? Bonus is generally not done, it is 1 lakh only. So you'll never do mistake. If bonus is generally not done, so it is coming 1 lakh in the balance sheet and we want 1 lakh only. So therefore ignore it completely. If bonus is generally not done, ignore it completely. Got this point? Are you able to understand? Yes, sir. It is how much? 10,000. Correct. Now, can you see this is profit after bonus shares? Because bonus shares generally done. So we'll add back bonus share first. Because we want profit before bonus shares. So what is the amount of bonus share? 50,000. 50,000. So can you see it has been declared from reserve, general reserve. Look what I have given. Declared from general reserve. So we'll add back where? General reserve. So you'll add back in general reserve. Understood? Understood why general reserve? However, it will be always given out of general reserve only. If general reserve is given. If there is only PL, then add in PL. Correct. Not done. This become what? 1 lakh 10,000 and because it become positive now 20,000. Now this will be allocated in pre and post acquisition profit. But I have not given the entire year is post. Check karo. The date of acquisition what I have given 1/4 only. It means can I say entire 12 months is post? So entire profit become post. You want to change me? Chalega. We'll do this only now. Okay. So we'll say pre and post. So entire profit will be post. In this write down two items, PL and general reserve. So how much allocated profit? 1 lakh 10,000 in post now. PL and 20,000 general reserve. And this will be nil. Then we'll add opening balance. Opening balance how much? 1 lakh plus 1 lakh. We'll add where? Pre. Then minus final dividend paid. But up from where? From where? Pre. Because declared for previous year. Pre-acquisition profit. So minus from 10,000 pre. And can I say minus bonus share also? Minus bonus share. But it has been declared from pre or post profit. What is given in the question? Declared from pre-acquisition profit. To deduct from pre. Even though not given, bonus share will be always assumed to be deducted from pre. The question is silent. Suppose they have not given. So bonus share is always from past accumulated profit. It cannot be from current year profit. So always reduce from what? Pre. Always reduce from pre. Understood? So how much? 50,000 reduced from pre. Understood? This point. Have you understood this point? So now what is the total? 1 lakh 40,000, 1,10,000 and 20,000. Understood? Have you understood? This you have understood? Understood? I understood your doubt. I understood your doubt. Just try to understand. You only think, what is the meaning of bonus here? Bonus here means what? Ki if you have accumulated profit, use accumulated profit, that is given as a bonus share to whom? The equity shareholders. So use accumulated profit will be current year profit or past profit? Past profit. Then also leave this. What is given in the question? It is declared from pre or post? Pre. If it is given, why you are fighting with the question? First thing this, you are saying it must be deducted from post now. No, it is given, declared out of which profit? Pre. So will it reduce from what? Pre only. Even though not given, I will say deduct from which profit? Pre only. Don't deduct from post. Understood? Correct? Yes. Okay. There are some points which I am not saying because right now I am going totally from exam point of view. Because if I say much, 90% student will be confused. So that I am restricting myself. Teaching in 6 days is quite difficult. Means entire subject 6 days quite difficult. It cannot be, and I am teaching you everything. Means if you go to some other revision class now, they will not teach you this much. I am teaching you everything, not skipping anything from exam point. Each and every point I am saying. This detail I am giving. Example. Understood? एक बार ताली तो मार दो मेरे लिए यार. Clap, right? But I need motivation now. I am motivating myself. We also require motivation. Okay? Chalo. This much you understood? Correct? So this you understood. Now we'll prepare what? Sona. Sona we write down date of acquisition and date of consolidation and post में PL and general reserve. But what is equity share capital given? Can I say it is given 1,50,000? So this is including or excluding bonus share, and we want including only, and therefore it is already added. No need to add again bonus share, because can you say bonus share generate is done and we want including bonus share, so it will be including bonus share only. Therefore don't do any adjustment in Sona. Understood? We want including only. For your concept, can you say, just try to understand. Can you see what journal entry we have done here? We are reducing reserve and surplus, and we are increasing what? Equity share capital. So you can see we have reduced what? Pre-acquisition reserve. So we'll add pre-acquisition capital or post-acquisition capital? Pre-acquisition capital, and therefore we have added to what? Pre-acquisition capital. Means ultimately you reduce what? Your pre-acquisition profit. You increase your pre-acquisition capital. Ultimately net effect is 0, and bonus share will not affect net asset. Bonus share will not affect net asset. Understood the concept? Means you reduce your pre-acquisition reserve and surplus, and you added to what? Pre-acquisition capital. Ultimately what happened? The net asset on the date of acquisition remain same, because bonus share will not affect net asset. Bonus. If you would have written 1 lakh, so can you see it will change now? So can you change net asset due to bonus share? You can't change net asset due to bonus share, because bonus share will be without any consideration. So it will never affect your net asset. Understood? Are you able to understand why we are not writing 1 lakh here? Understood? Why we are not writing 1 lakh? So whatever is written, don't do any adjustment. This 1,50,000 write down as it is. Automatically it will be adjusted. Automatically it will be adjusted. Plus, write down reserve and surplus. How much? 1,40,000, 1,10,000, 20,000. Total 2,70,000. Can you give me the total? 2,90,000, 1,10,000, 20,000. How much? 4,20,000. Now, can you give me percentage? 70 is to 30. Can you allocate? Two lakh 3,000, 87,000, 77,000, 33,000, 14,000, 6,000. Got it? Correct? Understood? Have you understood this AOP bonus share? AOP bonus shares? Then working note number, whatever COC, cost of control. But what is the cost price of investment? Correct. And can you say, because I have given dividend is wrongly created in the question, you will do minus what? Pre-acquisition dividend received. Can you give me the amount? $10,000 or 10,000 का 70%? 70% na? 70%. And this is why we are deducting, because wrongly created to PL. It is given, I have given. So 7,000 deduct from this. So this become correct amount 4,93,000. Then minus share in net asset. Net asset. How much will take? 2,03,000. This so you have understood. 2,03,000. So what is goodwill? 2,90,000. This so you have understood. MI will be this total. You can prepare by your own. MI will be this. Minority interest will be this na. This plus this. Prepare. Now consolidated में क्या करेंगे? Let on. Next working. Consolidated reserve and surplus. We'll have PL and general reserve. So first balance so I have not given, question mark. Can you say from this we'll also deduct what? Pre-acquisition dividend received rectification. So from this we'll deduct 7,000. Understood this fine? That rectification. And then plus post-acquisition profit. Post-acquisition profit as per working note of Sona 33 and 77 and 14. So 77,000 and 14,000. And your balance sheet you prepare, that will tally. That will tally. Bonus shares till now not asked in exam. I don't know whether this is how much important, but if asked, it can be dangerous. So better do it now. Why to take risk only because of one concept? If asked, so then the consolidation will become zero na. So now you have understood, you can at least attempt it. So even though you are not doing correct, 14 में 5 marks is also very important. So each marks, if you saying 5, 5, 5, so it become 50. Okay. But if you understood, you can score 14 out of 14. So let us now understand what is given. So what I have given. Next concept is bonus shares na. So treatment of bonus shares. Bonus shares. Correct. So adjustment number 1, calculation of holding ratio of parent company. Calculation of holding ratio. So holding ratio of parent company, either you take number of shares held by parent company before bonus shares divided by total number of shares subsidiary company before bonus shares, yeah, you take after bonus shares. So be careful about this holding ratio. Understood? Correct. Second, adjustment number 2, treatment of bonus share in AOP and SONA. If bonus shares are not recorded by subsidiary company, then देखो what I have said, ignore bonus share adjustment completely from AOP and SONA. Means ignore that adjustment from your solution. Ignore that adjustment from solution means ignore it. Your solution will be correct. Chalega? Are you able to understand? But if bonus share recorded by subsidiary company, what I have given, closing balance, opening balance. This will be profit after bonus shares, then add bonus shares. Add bonus shares, this will be profit for the year. Now this will be allocated to pre and post as per the time ratio. Then we'll add opening balance of pre. Then bonus share always deduct from pre, even though question is silent. However, that will not be silent. They will always say pre-acquisition journalism. But even though question is silent, always deduct from pre. Then this becomes total pre, total post. Then a statement net asset, this equity share capital including bonus share take. And it will be including bonus share only. So including bonus share you have taken. Then this will be added to date of acquisition. This will be added to post. This will be your net asset. This will be your net asset. Then one attention I have given. If final dividend declared and paid in current year, it will be calculated on share capital before bonus share. Before bonus share. Understood? And there is now one more point about bonus share. I think there are 3 points. First, holding ratio mistake. Second, dividend wala you have understood. Adjustment also I have explained. Okay. Now, bonus share declared by subsidiary company will be received by parent company. This parent company will also record it. So what is journal entry? What is journal entry of bonus share received by parent company as per AS 13? No journal entry. Very good. Means you remember AS 13. Means if bonus share received, so for that no journal entry. No journal entry. It means no adjustment in parent company books, even though not recorded, because no journal entry. Correct now. Now sometimes question says, actually this parent company has not recorded bonus share. Thank you very much. Don't be confused now, because they will not record only. So to confuse you, they will say both the company have not recorded bonus share. The company will never record. Are you able to understand what I am saying? So in the books of parent company, for bonus share received, no journal entry. Therefore, never pass any journal entry. Even though they say it is not recorded, because it will not be recorded. Got this point? So that is adjustment number 3. As per AS 13, no journal entry is required in the books of parent company for receiving bonus shares. Only total number of shares held by parent company will be increased by bonus share received. Chalega? Done. Bonus share also I have done. Now, 2 small adjustment. Let us do it. First is cancellation. So you have understood. So cancellation. Can you say for cancellation mutual debt, payable account, debit, receivable? As we are doing in amalgamation chapter. Now there can be 2 type of question. Suppose both are same. This is also 10,000. This is also 10,000. So cancel. But sometime what happen? Payable they will give 9,000. And receivable they will give 10,000. So this might be due to some check in transit. Means one company who is supposed to pay, they have issued check, but other party has not received the check. So the person who has issued a check, they have reduced 1,000, but that party has not reduced 1,000 who are supposed to receive. So it is quite possible your payable is coming how much? 9,000, and your receivable is coming how much? 10,000 in the balance sheet. So difference will be check in transit. The difference will be check in transit, and that check in transit will be shown in the CBS as cash and cash equivalent. Cash and cash equivalent. This can be asked. Any difference will be considered as check in transit. Chalega? Correct. For cancellation mutual acceptance, same thing what we have done in amalgamation chapter, bills payable to bills receivable, it will be cancelled only with the bill which is not discounted. Means bill which is discounted will not be cancelled. Same thing we have done in amalgamation chapter. Understood? Correct. Now, there is one special point. Let me ask you this point. Suppose parent company, subsidiary company. The subsidiary company has 12% debenture of rupees 1 lakh. Understood? And parent company has invested in this debenture at rupees 1,50,000. Quite possible. Means they have purchased the entire debenture of subsidiary company. Quite possible or not? So can you see it is as simple as cancellation borrowing. Means debenture is borrowing or not? It become intercompany borrowing, intra-group borrowing. So this will be also cancelled. So this will be cancelled. This will be cancelled. And can you see here parent company has paid more amount. So whatever extra amount paid, that is loss, and that loss will be transferred to the PL of parent company. So any difference in this will be considered loss, and loss will be adjusted in consolidated PL. Consolidated PL can be asked. Can be asked. Okay, sir. Have you understood this point? Have you understood this point? So that is only given. What is given? Check karo. Ki debenture account debit with nominal value of debenture held to investment debenture with carrying amount of investment in debenture held. Any difference will be gain or loss on cancellation debenture, which will be transferred to consolidated PL. Understood? Correct. Suppose they are given in this way. Ki 12% debenture 1 lakh. And they have given parent company investment nominal value 50,000 and the cost price 60,000. What does it mean? Means out of 1 lakh, how much they have acquired? Only 50,000 at a cost of what? Means you can cancel only 50,000 now. You can't cancel entire 1 lakh. It means here the journal entry what? Debenture how much cancelled? 50,000. Investment how much cancelled? 60,000. And the difference will be gain. And the gain will be transferred to PL. How much? Sorry, loss. Loss will be transferred to PL how much? 10,000. Understood this point? This point? Okay. Can be asked, therefore I have done. Okay. आगे चलते हैं. Next concept 9, cancellation of URP. We have done cancellation of URP, unrealized profit in amalgamation chapter. Similar to that. Okay. What is the concept? सुनना. कि parent company has sold to subsidiary company. Of course, during post-acquisition period. This is not during pre-acquisition period. This is during post-acquisition period. So parent company has sold. Okay. Suppose the cost price is 1 lakh. Profit is 10,000. And they have sold at what? 1 lakh 10,000. So this becomes the cost price of inventory of subsidiary company. And this remain unsold. So this include URP of parent company. So this need to be cancelled. So okay, inventory will reduce by what? 10,000. And this is a URP. This is a profit of which company? Profit of parent company. The profit of parent company, you say, profit of parent company will be adjusted in AOP ki consolidated PL. Consolidated PL. So what will be our journal entry? Consolidated PL account debit to what? Inventory. How much? 10,000. Means reduce your consolidated PL and reduce inventory by 10,000 in balance sheet. Of course, if suppose 40% remain unsold, so only 40% adjustment will do. If suppose out of 1 lakh 10,000, only 40% is unsold, 60% sold. So 60% realized, then you will do journal entry with 40% of 10,000. 40% of 10,000. Understood? Correct? Reverse. If I am saying parent company, subsidiary company, but goods are sold by subsidiary to parent. So suppose same thing, cost price is equal to 1 lakh. Profit is equal to 10,000. Sale price is equal to 1 lakh 10,000. So this will become stock of parent company at what? 1 lakh 10,000. It means now the stock of parent company include URP of subsidiary company now. URP of subsidiary company. It means you need to reduce stock by how much? 10,000 in CBS, and you should also reduce the profit of which company? Profit of subsidiary company means in AOP, in consolidated PL, in AOP. But the pre ki post, because this will be always post transaction. So always reduce post acquisition profit. So your journal entry become post acquisition profit in AOP to inventory. So what is your journal entry? Post acquisition profit in AOP to what? Inventory. Understood? Have you understood? Correct. So what we have understood? Whenever it is parent to subsidiary, we call it downstream transaction. We call it what? Down, because goods are going down now from top to bottom. So downstream transaction. So it means it becomes the profit of parent company included in the stock of subsidiary company. Therefore, you need to eliminate profit from consolidated PL to what? Stock. Chalega. But if it is upstream transaction from subsidiary to parent, then it is the profit of subsidiary company included in the stock of parent company. Then you should do post acquisition profit reduce karo in AOP. Post acquisition profit in AOP to what? Stock only in CBS. Understood? Have you understood? So this can be, this already asked in exam, can be asked in exam. This is important. Okay, correct. This also you have understood. That is only given. You can read it. Okay. Bonus here done. Bonus here done. Proposed dividend they are not asking. Error they are not asking much. This concept in 13 also they are not asking. They are not asking. Now I will go from exam, because whatever they are not asking. Now more and more concept, more and more confusion will increase. Up to this, I have seen there are questions in ICA study metric. Up to this. So let us take one big question. Jabardast question le le. Huh? One Jabardast question which is not in ICA study material. Can I take? With all the adjustment? Bolo. Brain is working. Chal. Means that type of question, rare chances. Means if you have done PAP, then they will ask. But this question is from ICA study, ICA resource only, but not in your book. Okay? Chalo, we'll take this question. I think this is question in ICA study matter only. I think, yaad nahi hai, 21. Good question. On 31st March 2001, the balance sheet of H Limited and its subsidiary S Limited stood as follow. Read the question. This is H and this is S. Printing mistake. You have read the question? Then they have given notes to account. Read it. Following information. H Limited purchased 180 lakh shares in S Limited on 31st March 2000 when the balance of general reserve and PL account is itna and itna respectively. Okay, sir. On 1st April 2000, S Limited declared dividend at a rate of 20% for the year ended 31st March 2000, means for the previous year. S Limited credit dividend received to his PL account. Oh, wrongly credited. Understood. On 1st Jan 2001, S Limited issued 3 fully paid up bonus share for every 5 shares held out of balance of general reserve as on 31st March 2000, means pre-acquisition general reserve. And if nothing is given, but nothing is given means journal entry done or not done? Done. If nothing is given, to correct na. They will pass the journal entry na. It means journal entry has been done. It means all adjustment. Correct. On 31st March 2001, all the bills payable of S Limited in balance sheet were acceptance in favor of H Limited. But on that date, H Limited held only 45 lakh of these acceptance in hand, the rest having been endorsed. So whatever is endorsed cannot be cancelled. So we'll cancel only how much? 45 lakh. We'll cancel only the bill which is not discounted here, which is not endorsed. So we'll cancel only what? 45 lakh. Yes, sir. On 31st March, S Limited inventory included goods which it had purchased for 100 lakh from H Limited, which made a profit of 25% on cost. First you say it is downstream, upstream. Who has sold to whom? Parent company has sold to subsidiary company. Means it will affect C consolidated PL or AOP? consolidated PL. So just write down consolidated PL. कि भाई will do adjustment there. AOP will not be affected. AOP will not be affected. Understood? URP we need to find out. Analyze profit we need to find out. Understood? बताओ ना, simple ना. All point we have covered. All point we have covered. Yes or no? Step by step we'll move. Let's see. I will not do. I will ask only. But I will just ask you step by step. ठीक है ना? चलो, can we start? Working note number 1, holding ratio. Correct? Parent company. But how many shares they have acquired? Actually, you have this question now. You have downloaded now. बार बार I need to show, तब मजा नहीं आएगा. ठीक है? तो how many shares they have acquired? 180 lakh. 180 lakh divided by. But what is the number of shares? What will be the number of shares? This is authorized. Huh? Don't take authorized. This is authorized is not important. Huh? 4,800 divided by 10 means 480. You will divide by 480. Bonus share journal entry has been done. Means this is what? देखो first May died. Now you are wasting your time in exam because 0 marks. Because everything will be wrong ना. अरे बोल ना रे. अभी ताजा we have done, but I said dangerous. Here, if I am also student, I will also do mistake. But ठीक है ना, we'll याद करेंगे. Bonus share, be careful. Bonus share, be careful. And so if journal entry done, to dangerous. Journal entry not done, to easy. Got this point? So 4,800 is including what? Bonus shares. Okay. So what is the ratio? Check करते हैं. Issued 3 for 5. Means initially it was 5. Now plus 3. Now it become 8. Means 4,800 is 8. You need to find out 5. So what will be this? 4,800 into 5 by 8. This you are understanding now. This is mathematics. Anyone who is not understanding this? Pakka. Because I am not teaching you mathematics. Pakka. So this is coming 3,000. 3,000. It means bonus is what? 1,500. Sorry, 1,800. Bonus is 1,800. So 3,000 is before bonus shares. 1,800 is bonus shares. After bonus it becomes 4,800. Understood? Correct? Yes, sir. So now you'll divide by what? 300. But number of shares 300 into 100. What is percentage? 60%. Or what you can do? You can do it this way. 180 plus bonus share will be what? It will be 3 by 5. How much? 180 into 3 by 5. 108. Divide by what? 480. It will be also 60%. Either do this or this. Your choice. Okay. So what is MI? 40%. Can we move? Working note number 2. Write down date of acquisition is what? Date of acquisition they have acquired on 31st March 2000. 31st March 2000. And date of consolidation is what? Check करेंगे. It is 31st March 2001. Means 1 year. 1 year na? So 31st March 2001. So your post period is entirely 12 months. Okay, sir? Then working note number 3. There is no fair value information. There is no fair value adjustment. There is no fair value adjustment now. Thank you very much. You want me to give fair value adjustment? Chhodna sir. But fair value adjustment you can do. That PP wala adjustment. ठीक है ना? So there is no fair value adjustment. Directly we can start with AOP. AOP. So in AOP they have given which with reserve and surplus. Check करो. They have given a general reserve and PL account. So write down general reserve and PL account. Can you give me the closing balance? Closing balance is how much? closing balance from balance sheet. 1380 and 1620. 1380 and 1620. Opening balance you will take from where? Additional information. Opening balance will take from additional information. It is 3000 and 1200. Just check 3000. Once check karo. 3000 is general reserve and 1200 is PL account. Sometimes they give reverse. So read the question carefully. Okay. So 3000 and 1200. Who is sleeping? Huh? Profit. Profit is what? This is negative how much? 1620. And this is how much? 420. Understood? Now, whenever you are coming here, think about 4 items. Abnormal loss given? Not given. Dividend given? Yes. Bonus share given? Yes. One more. Is there any error given in subsidiary books? No. Sometimes they give some error that need to be also rectified. Till or not given in any question of ICI. So think about 4 points. Is any abnormal loss? No. Dividend? Yes. Bonus share? Yes. And error? No. They will never give error. Given, so you should apply your common sense. You rectify the error. Yes or no? Correct? Yes, sir. So we'll do plus final dividend paid. How much percentage? 20% of what? Excellent. 3000. Understood why 3000? Not 4800. This is final dividend of previous year. The previous year with 3000. Danger. You have understood means. Correct? So 300 will be added to what? General reserve or PL? So PL में add करो. Oh, 6. Sorry, my mistake. 600. My mistake. 600. Then plus bonus share because journal entry has been done. So what is the amount of bonus share? Already we calculated. 1800. Already we calculated. Or you can do in this way. 4800 into 3 by 8. Because 5 plus 3 is equal to 8. So 3 by 8. Correct now? You can do in this way. Done. Both the adjustment done. Can you give me the total? $180 and 1020. Now it should be allocated. We write on pre and post. Can you say entire profit is post? Entire profit is post. So can you give me allocated profit? Entire profit is post. Yes or no? Correct. Then we'll add opening balance. How much? Opening balance how much? 4200. Add opening balance where? In pre. Then whatever you added will be deducted. But the minus final dividend from where? Pre. Because it is declared from pre-acquisition profit. So minus final dividend how much? 600. And bonus share deducted from where? From where? Pre ki post? Always pre. I will say don't think only. Always pre. Always pre. How much? 1800 deduct. Done. All point done. There is no fair value adjustment. If fair value adjustment is there, then that will also come. PP etc. wala. That is not given in this question. How much? $1,800. Now next working note is Sona. Sona. Date of acquisition, date of consolidation, post. In post we can add on general reserve and PL. But how much equity share capital? How much? Bolo. 4,800 and no adjustment required because we want including only. We want including. So don't do any adjustment यहाँ पर. Okay, correct. Then plus reserve and surplus how much? 1800, 180, 1020 total. $3,000. Can you give me total? 5. It is how much? 6,000. 6,600, 180, 1020, 7,800. Now we'll distribute in parent company and MI. Ratio is what? 60:40. Allocate. 3960, 2640, 108, 72, 612, 408. Understood? चलेगा? Okay. This working note also understood? Can we move? Can we move? Bolo. Yes, sir. Working note number? Whatever is going on. It is what? Now we'll do goodwill or capital reserve. Means COC, cost of control. What is the cost price? This you do. I will not do. I want that you remember one point or not. Then calculated goodwill. How much goodwill is coming? Capital reserve how much? 13. Everyone getting this? Everyone getting this? 1320 capital reserve. But what is the cost price of investment? 3,000. 3,000 na this. Minus what will do? Pre-acquisition dividend. Everyone has done this. Pre-acquisition dividend how much? 600 into 60%. 60% na? 60%. How much? 360. 360 minus. Everyone done this? Good then. If you have done. Done na? How much? 3,000 minus this how much? 2640. Minus what? In the net asset. The net asset is how much? 3960. Very good. But what is capital reserve? 1320 capital reserve. Then next working note is what? Minority interest. How much on the date of acquisition? 2640. Correct. Then plus post acquisition profit. Can you give me the total of these two? 408 plus 72, 480 na. So 480 we can add. Total is what? 480 na. 72 plus 408. 3120. Then next working note is what? Consolidated reserve and surplus. So we have general reserve and PL. First, can you give me balance? From which balance sheet? From which balance sheet? So it is 2784 and 2715. 2784 and 2784 and 2715. Correct? First, minus what? Minus what? URP. Wow, very good. URP. Chalo, we'll need to calculate. Then minus what? Minus URP, annualized profit. There we need to calculate amount. Therefore, I will wait. Minus pre-acquisition dividend. Very good. Excellent. How much? From general reserve or PL? PL na. Then plus what? Plus post acquisition profit. As per working note already we calculated, it is 108 and 612. 108 and 612. Only I need to explain what URP. URP. URP means annualized profit. Chalega. Okay. Up to this, chalo URP, let us check what they have given. So URP they have given S Limited inventory include goods purchased rupees 100 on which S Limited had made a profit of 25% on cost. 25% on cost and 25% on sale. These are two different GP margin. You know na. Now this is 100 is sale price of holding company. Cost price of holding company. It is sale price of holding company. But they have given 25% on cost. So 25% on cost, we need to convert in terms of sale. So if 100 is the cost, 25 is the profit, so sale is 125. So can you say we'll do 25 by 125? So we'll calculate 100 into 25 by 125. This is mathematics. I hope everyone know this. Nothing to explain much. But be careful. Sometimes they give 25% on sale. Sometimes they give 25% on cost. If they have given sale, then 100 into 25% directly. But if they have given 25% cost, so that become 25 by 125. How much it is coming? 20. The 20 is the URP. And nothing is given how much. So it is entirely unsold. Entirely unsold. If suppose they are given 60% unsold, then we'll do 20 ka 60%. Understood? So if nothing is given, entirely remain unsold. So 20 will deduct. So 20 will deduct from PL. So deduct from PL and in balance sheet deduct from inventory. Correct? Two adjustment. Deduct from consolidated PL and in balance sheet deduct from inventory. Done. Batao, what is the total? 2,892 and 2,947. Got this point? Balance sheet you will prepare by your own. I will not prepare. Okay? Balance sheet just check. The answer is given. Check whether it is correct or not. All points are correct or not. Just check. Two adjustment. There is one inter bills payable bills will be cancelled and URP inventory will be cancelled. Just check. All amount is correct or not. What is our minority interest? 3120 na? Correct? Then what is our capital reserve? What is our general reserve? What is our general reserve? This is also correct. What is our PL account? 294. Everything is correct. Balance sheet you can prepare. But this is good question. Good question means a lot of concentration required. One idhar udhar. In this only one point was missing, that fair value adjustment. If I would have given fair value adjustment, then to dhamaka question. Correct? Now my role is less. Now it is your role. I have explained each and every point. To conclude, let us come to conclude. Let us conclude the chapter. There is only one point left. I need to explain one point for MI. Okay, now? And one point for uniform accounting policies. Come to this. I have given a step for preparing consolidated financial statement. Before exam, if you revise this now, all points will be covered. Let us see. First step number one is what? Calculate share of parent company NMI in subsidiary company if specifically not given in the question. If they are given 70%, then so there is no need to calculate. So 70%, 30%, but if that is not given, so calculate it. So always be careful whenever there is a bonus share. So this you have understood, check kar lo. Bonus share, so be careful. If bonus share is not there, then you can easily calculate it. Chalega. Then step number 2 is identify date of acquisition and date of consolidation. This also you know. Then prepare working note of fair value adjustment as per concept number 7 in our book. So fair value adjustment you understood. Fair value adjustment you understood. Correct. After that, prepare do working note of fair value adjustment. Then prepare AOP. So we write down PL, retained earning is PL, and other reserve. Correct now. Closing balance and opening balance we write down. So this will become profit after all adjustment. If there is any abnormal loss, we'll add back. Yes or no? If there is any dividend paid, we'll add back. Dividend paid will be added back. If there is any bonus here which is recorded, so what we'll do? Add back. But where? In general reserve. In general reserve, na? We'll add back in general reserve. Proposed dividend, I have not explained. If you want, I will explain, because they are not asking explain. They are not asking proposed dividend wala point in consolidation chapter. ठीक है ना? If any error given in the books of subsidiary company, suppose they have given some error, so can you need to rectify that error? And when you do rectification, either it will increase profit or decrease profit. So as per rectification journal entry, either you add profit or you decrease profit. That require common sense. Rectification will be based on the information given the question. I don't know which type of error they will give. Suppose they have said in this way कि wages paid for the installation of machinery has been charged to PL account. So it should be capitalized. So you will say PP account debit to PL account. So you will increase PP and you will also increase your profit. So your profit will be increased. You will add to the profit. So that will depend upon the information given in the question. But till now, no question of error given in ICA study material. Okay? So nothing to worry. Correct. So can this become profit earned? This will be allocated in pre and post. This will be allocated to pre and post. So profit for the year allocated in time ratio. This we can allocate. Then we'll add opening balance. Then deduct abnormal loss from which? Pre or post? Then deduct abnormal loss from pre or post as per the date of occurrence. It can be either pre or it can be either post. Then deduct dividend from pre ki post. No. It can be from pre-acquisition profit. It can be post-acquisition profit. Normally it is pre, but read the question carefully. One question I have given for 2 years. In that, one dividend was pre, one dividend was post. Got this point? Correct. So it can be pre, it can be post, depending upon the source of profit from which it has been declared. So if declared from pre-acquisition profit, minus from pre. Declared from post-acquisition profit, minus from post. Correct. And bonus share will be deducted always from pre, always from pre. This adjustment is not so important. Then any URP upstream transaction, but it will be adjusted with AOP or consolidated SOPL. None upstream transaction means subsidiary has sold to what? Parent company. So in the stock of parent company, there is a profit of subsidiary company. So you should reduce what? Your post acquisition profit. You should reduce your post acquisition profit. So less unrealized profit on unsold stock. This question till now we have not taken. Any question I have not done in this way. Means last question was downstream. Upstream I have not taken any question. To reduce your post acquisition profit. Reduce your post acquisition profit. Understood? Then do fair value adjustment. Any increase in PP, this will be plus, this additional depreciation minus. And if there is a decrease in PP, this will be minus, and there will be saving in depreciation, this will be plus. This point already we have done. So this will be your total pre and total post acquisition profit. Understood? Entire point will be revised from this format. So before exam, just go through this format. Just 10 minutes before exam. So everything will be recalled. What to do, what not to do. Just this you deduct a preference dividend because that is thoda sa conceptual point. Until now no question of this nature has been given. If asked, you can't blame me. Okay. If asked, you can't blame me. Okay. Note, if bonus is not yet recorded by subsidiary company, ignore such adjustment entirely from AOP and so on. Then ignore it. Completely ignore it. Understood? Correct. Then previous SONA, date of acquisition, post and date of consolidation to equity share capital. इसको हटा दो. Delete this ना. This is by mistake. Equity share capital. Delete this. Equity share capital from the balance sheet of subsidiary company. From the balance sheet of subsidiary company, and then reserve and surplus from AOP. We can add on date of acquisition, post, and this. This will become what? Carrying amount of net asset of subsidiary company on the date of parent. This is INM is net asset, huh? Net asset. Net asset, understood? Okay, this will be allocated to parent company and minority interest. Minority interest. This will be allocated to parent company and minority interest as per the ratio you can allocate. Can I say this will go to what? COC. This will go to what? Consolidated reserve and surplus. And this both will go to what? Minority interest. This you have understood. Then calculation of goodwill or capital reserve. So first we'll do cost price of investment from the balance sheet of parent company. From this deduct pre-acquisition dividend receipt. If wrongly credited to PL, deduct. So this will become carrying amount of investment. Carrying amount of investment. From this deduct parent company share in fair value of net asset on the date of acquisition as per SONA. This will deduct, and this will be goodwill or capital reserve. Understood? Now we'll prepare consolidated reserve and surplus. So it can be retained earnings is PL or other reserve. So we'll add on balance as per parent company balance sheet. Then pre-acquisition dividend receipt if wrongly credited to PL, deduct. Deduct. Correct. Then share of post-acquisition profit of subsidiary company from SONA, that you deduct, and that you add, sorry. Then share of post-acquisition loss. There can be loss also. Till now no question loss we have done. If loss, to deduct it. Profit will be added, loss will be deducted. If there is a loss, deduct it. Unrealized profit on unsold stock. Downstream transaction will be adjusted यहाँ पर. Downstream means parent has sold to subsidiary company. Last question. The URP will be reduced. Correct now. This point also we have done. Debenture wala point. Debenture investment. Any gain or loss on cancellation of debenture. Intercompany debenture hold. If that is the case, the gain or loss on cancellation of debenture will be also adjusted with PL. That one point we have done now. Debenture held by parent company. Debenture of subsidiary company held by parent company. That point can be asked. Correct. This proposed dividend I have not done. Any error in the books of parent company need to be also rectified. So suppose they have given some error in the books of parent company, that need to be also rectified. So that will be as per the information given the question. Till now no question of that nature has been given. Correct. This you delete. This is the special point, delete. Okay, na? So this become balance to be shown in CBS. Balance to be shown in CBS. Understood. All point covered. Only one special point are not done, preference dividend over point, because no question of that nature has been given. Then minority interest, so of course you can do it. MI means this also you did remove, because this is all special point. Correct. Then how to prepare CBS? CBS I have given what adjustment is required. Just read it. You will be able to understand. Correct now. So consolidated balance sheet done. Now only I'll take one question of SOPL. One question of SOPL. चलेगा? Okay. Brain is working? हाँ? Brain is working? पक्का? चलो. One question of SOPL. Because इतना किया and they have asked SOPL, then full our effort is gone wasted. Correct ना? 2 times now they have asked SOPL question. Back to back attempt. Back to back attempt. Means we were also not expecting that type of question. But back to back attempt 2 times they have asked SOPL question. So ICA is like that only. Means they will give you surprise. Okay. So one question will do. With that one question you will be able to understand what is required. Where is that question? This question 28. Moon Limited and its subsidiary Star Limited provided the following information for the year ended 31st March 2001. They have given equity share capital, finished goods, they have given opening stock and then closing stock. Then they have given dividend income. Then they have given other non-operating income. Then they have given raw material consumed. Then they have given selling and distribution expense. Then they have given production expense. Then loss on sale of investment. Then sales and other operating income. Correct? Then wages and salaries. Then general and admin expense. Then royalty paid. Then depreciation and then interest expense. Correct? Other information. On 1st September 2008, Moon Limited acquired 50,000 equity shares of ₹100 each, fully paid up. So on which date? On 1st September 2018. I mean, right now this is which year? 2021. I mean, this year is entirely post acquisition. So this year entire profit will be post acquisition profit. Correct? Understood? Yes, sir. Star Limited paid a dividend of 10% for the year ended 31st March 2020. The dividend was correctly accounted. So can you see this is the dividend of which year? 31st March 2020, and that is post acquisition only. So that will be transferred to PL. So it means, can you say this dividend income include dividend received or not? So that should be cancelled, because that is dividend received from the subsidiary company. So that need to be cancelled. So any dividend received from subsidiary company will be cancelled in consolidated SOPL. Understood? Yes, sir. Moon Limited sold goods rupees itna at a profit of 20% on selling price. Correct? Understood. Inventory of Star Limited include goods worth rupees 7 lakh received from Moon Limited. So inventory of Star Limited include goods of 7 lakh. So how much total sale? What is the total sale? 17 lakh 50,000. 17 lakh 50,000. Out of how much remain unsold? 7 lakh. So this 7 lakh include profit, unrealized profit that need to be eliminated. Can this 17 lakh 50,000 should be eliminated from sale? Where is the sale? Sales will be eliminated from sale. Bole yes or no? And will be also eliminated from purchase. So will be also eliminated from raw material consumed, because this is purchase. Raw material consumed is what? Opening stock of raw material plus purchase minus closing stock. So sales will also decrease and purchase will also decrease, because that is intra-company transaction. That will be cancelled. Okay? I will explain about URP separately. Selling and distribution expense of Star Limited include 2,12,000 paid to Moon Limited as brokerage fee. Means can you say this is the income of Moon Limited and expense of Star Limited? So selling and distribution expense of Star Limited will decrease, and brokerage income, means this income will be included. It might be included because they have not given. It will be included because broker is not selling and distribution brokerage fee. So brokerage fee, you can consider it as other non-operating income, or you can also consider it as operating income. That become an assumption because nothing has been given, but that income will be also reduced. That income will be also reduced. Chalega. Similarly, general and admin expense of Moon Limited include 2,80,000 paid to Star Limited as consultancy fee. So can you say income of Star Limited will decrease and expense of Moon Limited will decrease? Cancelled. Correct. Star Limited uses some resource of Moon Limited, and Star Limited paid 50,000 to Moon Limited as royalty. You can see royalty paid is given. Correct now? Royalty paid. So this is an expense 50,000. So expense will decrease by 50,000, and this become income of Moon Limited. So that will also decrease. So can you say expense of one company and income of one company, that will be totally cancelled from consolidated SOPL? Are you able to follow me? It is super easy. Only you need to understand what I am saying. Okay. Previous consolidated SOPL as per schedule 3. Can I explain with the question only? With the solution only? Correct. Now, format you know. Format to you know. So first we write on revenue from operation. Revenue from operation. So revenue from operation, you will do plus plus. Huh? I am just saying. So revenue from operation means sales and other operating income will come. So can you see, you will add this, add, everyone add 33 lakh. Whatever I am saying, that you add. So 33 lakh, this will be added. 33 lakh 50,000 and 19 lakh. Sorry, this is 3 crore 32 lakh 50,000 and 1 crore 90 lakh 75,000. This you have added. No, don't say me. Add it. First you have added. Now minus what? Minus what? Okay. Can you say once sales will be minus? So sales now is 17 lakh 50,000. 17 lakh 50,000 will minus. Correct. 17 lakh 50,000 will minus. And in this question, they have assumed all this income are what? Operating income. Means expense of one party and income of other party, they have assumed operating income. So they have given sales and operating income. So you should also reduce 2,12,500, 2,80,000 and 50,000. How much it is coming? 5 crore. Done. आ गया मजा. Correct. Understood. First you got. अरे बोलना रे. Then we write on other income. Then we write on other income. Other income what will come? One to dividend income will come. Add 16 lakh 80,000 plus 4 lakh 37,500. Add this two. Have you added? Don't say me the amount. You have added now. Thank you very much. So you have added dividend income. Then there is one other non-operating income. You will add this also. Other non-operating income. Correct. Understood? Correct. Now, if you remember, last day we have done schedule 3. So I have said gain or loss on sale of investment is adjusted in other income only, whether it is gain or loss. Correct. So can you see here there is one loss on sale of investment that will be deducted from what? Other income only. So deduct loss on sale of investment. However, you can also write down in expense also, but normally let us follow schedule 3 format because they have also followed schedule 3 format. So any gain or loss on sale of PP, any gain or loss on sale of investment, any exchange gain or loss will be adjusted in what? Other income only. So even the loss, write down as a negative item as per the schedule 3 requirement. As per schedule 3 requirement. Chalega? So can you say they have also followed schedule 3 requirement? So minus 2,62,500 you have done. Correct? Correct. Understood? What is the total coming? So how much it is coming? What is your answer? So how much it is coming? Match na? Match. But they have done one mistake. Dividend receipt will be cancelled. That is a mistake done by IC solution. That is 100% mistake. So we'll correct it. Can I say what is the correction? Correction is what? What is the dividend declared? 10%. 10% of what? Capital. Capital is what? How much? 60 lakh. 60 lakh, na? 60. How much dividend paid? 6 lakh is dividend paid. What is their holding? They have acquired 50,000 equity shares. Out of what? 60,000 means how much percentage? 50,000 divided by 60,000. 50 by 60, 100. How much? ऐसा परसेंटेज आ रहा है, चलो ठीक है, तो 83.33%, तो क्या 6 लाख का 83 पॉइंट how much it is coming? 4,09,000. Please, 1%. 4 lakh means, can I say approximately 5 lakh? Approximately 5 lakh. Correct. So that should be also reduced from dividend income. This is the mistake done by ICI. So from my point of view, 100% mistake. As per my expertise knowledge, 5 lakh should be deducted. Understood? Because that should be also cancelled. Of course, should be cancelled. Dividend paid and dividend received should be cancelled or not? Understood? Yes, sir. So minus 5 lakh will do. Okay. This become total income. You have understood total income. Now next, cost of material consumed. Cost of material consumed. So what is given? Batao. Can you say 13? This plus this will do. This plus this will do. What have added? And production expense will be also added to the cost of material consumed. Any production, any manufacturing cost will be also added. So add production expense also. Add. Don't say me. So raw material consumed added. Production expense added. Understood? Correct. Now, can you say from this will deduct purchase? So 17,50,000 is sale. So from one party it become purchase. So minus 17,50,000. How much? 2 crore. मजा आया? मजा? Understood? ठीक है. Changes in inventory I will explain at the end. Changes in inventory I will explain at the end, because that is special point. Then coming to EB expense, can I say wages and salary will come? So EB expense means wages and salary. So this is wages and salary, add it. Add. There is no adjustment for EB expense. So this will come in the SOPL. देखो how much it is coming? So मजा आया? Then we write down finance cost. The finance cost is given how much? Interest given interest expense. The interest expense, this will come. Add it. And there is no adjustment for interest cost. There is no adjustment. How much it is coming? 2,27,500. Okay. Maja. Then we write down depreciation and amortization. Depreciation and amortization, how much? This plus this. And there is no adjustment. So this will be also that plus that. How much? 4,50,000. Maja. Now all balance expense will be other expense. All balance expense will be other expense. So let's see what are left. Check karo. This done, this done, this done. Selling and distribution plus selling and distribution expense plus this two. Production expense done, loss done, sales done, wages salary done, general admin add. Take correct amount, huh? Okay. Royalty paid add. But these three added. Correct. Then there is some intercompany adjustment also. This selling and distribution expense, this will be minus 2,12,500 minus. because from income also we reduce. Then general admin expense 2,80,000 minus 2,80,000 and minus 50,000 minus from royalty paid minus karo. These three will be minus from other expense. What amount is coming? How much? Maja aaya? Maja. Understood? Now suppose you have understood change. Abhi I need to explain changes in inventory. Only one point. If you understood that, so this total become this minus this profit before tax, you will get 15 out of 15. If only I need to explain what? Changes in inventory. Easy or not? Easy or not? But notes to account is compulsory. If you are not, don't do only in calculator. The time will be taken in notes to account. Means very fast. Very fast. Only plus, plus, minus, minus. Correct? Only I need to explain changes in inventory. That I will explain. First, can we calculate URP? URP is 7 lakh is unsold and 20% on selling price. So 20% selling price, directly we can say 7 lakh ka 20%. 7 lakh ka 20% is what? 1,40,000. So URP is 1,40,000. Correct? Understood? Now they have given changes in inventory. This become, can you give me the total of opening stock? Total of opening stock. $72 lakh 10,000 na? And total of closing stock 1 crore 37,500. Understood? Correct. So if the closing stock is more than opening stock, whether it is a expense or reduction in expense, it is it gain or loss? Closing stock is more than opening stock, means it is gain. Means bachpan mein you should prepare trading account na. So if the closing stock is 1 lakh and opening stock is 80,000, so 20,000 affected debit side or credit side? Debit side or credit side? So your credit side is more by 20,000, so that become gain. Increase in stock is always gain. Increase in asset is always gain. So guys, it become gain. So if you write down in the expense side, you write down as a negative item. I will say whenever you write down opening stock minus, this is coming negative now, it will become negative. Opening stock minus closing stock, positive to write down positive amount, negative to write down negative amount. Samjhe? So this become negative how much? This minus this. How much? 51 lakh 27,500. This much you understood. Now what is our URP? 1,40,000. Just try to understand. When I am saying URP, so URP means you are reducing your closing stock. When you are, just think conceptually, when you are reducing your closing stock, so it will increase your expense, it will decrease your expense. When you are reducing your closing stock, so it will increase your expense, you decrease your expense. Increase your expense means your expense will increase. So in this you will do plus ki minus. This is expense. This is written in expense side. So you will do plus now. So plus you will do 1,40,000. So what is the net amount? How much? 49,87,500. What is given? Check karo. 49,87,500. So only here you can do mistake. So what you will do? What is the formula? That now opening stock plus closing stock, whatever amount, negative coming, positive coming, in this plus what URP? Plus karna URP. This will be the changes in inventory. If you are not able to understand, write low this. Because right now I can't explain much. Because for concept I have to go to back. That much time I don't have. Have you understood the formula? Opening stock minus closing stock, whatever. It can be negative, it can be positive. In that always plus URP. URP you know how to calculate? URP, both URP, downstream, upstream, both URP. Whether it is downstream whether it is upstream, both URP you add. Can you see you can calculate profit before tax? Bolo yes or no? Understood? But a simple question or not? Only high level of concentration required. So one question I have done, and similar question will be asked. There's so many things now. I know, but from my point of view, that question will again not be repeated. देखो अभी that question ना I will take 1 hour. देखो you are asking, I know which question you are asking. So I know your but you have time, but I will not be able to complete in today's program. That question by mistake they have asked in exam. They have also realized, huh? So you have done. Dekho, just 1 second, 1 second. That question came now. When that question came now, we understood gone. We gone. So it means nobody can do that question. If you can't do, just write whatever you can write. Don't panic. Don't panic. If you want, I can take that question. If you want, I can explain. But I know at this point of time, you will not be able to understand. For that, more understanding required. I need to be thoda sa slow. That question in class, I take 2 hours in my regular class. And pura chapter I have completed in 5 hours. You can understand. There's some limitations, na? You come to my regular class better. Now, dekho, if asked, you can't blame me. Already I have given disclaimer at the beginning. If asked, you can't blame me. So that I will do sometime. If time left, I will do it that question. Okay. Now all questions you can do. Whatever we have done in the class, all points has been covered in the question of ICS statement except that question. Because that you can understand now, but if I will explain, it will take a lot of time. Huh? Now you have asked, if that come now, I will be in guilt. I will be in guilt now if suppose that question came, why I have not done that question. Chalo, we'll come. This format is given to understand. You can understand with this format of SOPL. Okay, everything is written in this. From my point of view, except that question, I have completed consolidation. Okay. Achha, one or give me 10 minute, 5 minutes we have. One type of question which we have not done. That question can be asked, already asked in exam. Minority interest. Minority interest. Now, minority interest, whether it can be negative. No, it cannot be negative as per AS 21. As per AS 21, it cannot be negative. So there is some point given. For that, there is one question. I will try to explain from that only. Okay, na? Come to MI. One question. From that, I will explain, because that same to same question will come if they ask the questions. They don't have any other questions. I think you might have done that question also. This 14. A Limited acquired 70% of equity shares of B Limited on 1/4/2001 at a cost of rupees 10 lakh. When B Limited had an equity share capital of 10 lakh and reserve and surplus of 80,000. So can you say this become 10 lakh and this is 80,000? So this become 10 lakh 80,000. This become net asset on the date of acquisition. And in the last, if you see, and means if nothing has been given, so carrying amount of net asset and fair value of net asset will remain same. So they have given what? Net asset. What is the PC? 10 lakh, 10 lakh. And 10 lakh 80,000 ka 70% how much? 10 lakh 80,000 ka 70% how much? 7 lakh 56,000. What is the goodwill? Goodwill how much? 3 lakh 24,000 is the goodwill. Correct. And can you say what is the MI on the date of acquisition? It will be 10 lakh 80,000 ka 30%, correct? That will become MI on the date of acquisition. So what is MI on the date of acquisition? Both are 3,24,000. Both are. So who said 3,24,000? I have wrongly written. So this is how much? 3 lakh? 3 lakh. 10 lakh plus. Give me calculator. I will only. So much confusion. Give me calculator. I will only do. This is 10 lakh. PC is 10 lakh. Thank you very much. Now you can go, otherwise you will be recorded. 10 lakh is PC. PC is 10 lakh now. PC is 10 lakh. Now it will become 2 lakh 44. You say 3 lakh 44. Chalo, happy. I am happy that someone is awake. 2 lakh 44,000. 2 lakh 44,000. देखो 10 lakh is PC ना, and 10 lakh 80,000 is net asset. तो 70% is 7 lakh 56,000, 2 lakh 44,000 goodwill, and 10 lakh 80,000, 30% how much? So 3 lakh 24 ना. So 3 lakh 24,000 is MI on the date of acquisition. This you understood? This much you understood? Now what they have given? Now question started after this. If you have understood this much, then I will explain that concept and this question. In the next 4 years, B Limited fared badly and suffered losses of itna respectively. So 4 years they have incurred losses. The losses will be borne by both parent company and MI in the ratio of 70:30. Okay. Thereafter, in the 5th year, they experienced turnaround and registered an annual profit of 50,000. In the next 2 years, they have earned again profit of itna. So the MI and cost of control is goodwill at the end of each year. Can its goodwill remain same 2,44,000 at the end of each year? So goodwill will not change. Goodwill, whatever you have calculated on the date of acquisition, due to loss, goodwill will not change now. So goodwill will remain same at the end of each year. Only what will change? MI will change. MI will change. Correct? So what is MI? So what is the MI at the beginning is on the date of acquisition? This already be calculated. Correct? Now what is the first year loss? First year loss is 2,50,000. 30% how much? So 30% will be transferred to MI and 70% will be transferred to parent company. Understood? Correct? So can you say after this what is the MI? 3,24,000 minus 75. It is positive only. So positive it is coming. So this will be shown in the balance sheet of the first year and one. Okay? Understood? Understood? Okay? Now second year what is the loss? 4 lakh. 4 lakh at 30%. So 1,20,000 will be transferred to MI and 70% will be transferred to parent company. Correct? And 2,49,000 minus 1,29,000. Again it is positive only. This positive MI will be shown in the balance sheet. Understood? Correct? Got this? Now what is the third year loss? Third year loss is what? 5 lakh. 5 lakh at 30%. 1,50,000. 1,50,000 and 70%. 3,50,000. But you can see 1,29,000 minus 1,50,000, it becomes negative. How much negative? So 21,000. Now MI cannot be negative. So this much loss will be transferred to parent company because MI cannot be shown as negative. So you can see this much loss. What adjustment they have done? They have done this plus and this minus. Understood? Are you able to understand? And MI become what? Nil. MI become nil. And what is the total loss borne by parent company? 3,71,000. But out of that, how much loss of minority interest? 21,000. Means parent company has borne how much loss of minority interest? 21,000. Understood? Because it cannot be negative. It cannot be negative. Understood this point? Have you understood this point? Next year, again loss. How much loss? 1,20,000. 1,20,000 ka 30%. So it is 36,000 and 84,000. But whether it can be negative. So once again, this loss will be transferred from MI to parent company, MI to parent company, and the MI will become nil. What is the total loss borne by parent company now? 1,20,000. But out of this, how much is of parent company? Sorry, how much is of MI? 36,000. Understood? This much you understood? Correct. Now they started profit. From fifth year, there is a profit. What is the profit of fifth year? 50,000. 50,000 ka 30%. 50,000 ka 30%. 15,000. So what now AS 21 says? This 15,000 will not be transferred to MI till it is adjusted with the loss of MI which has been transferred to parent company. So how much loss has been transferred? It is what? 57,000. From this will adjust what? 15,000, and nothing will be transferred to what? Nothing will be transferred to MI. So you can see they have done adjustment. You can do without adjustment and it will be nil only. It will be nil only. Understood? Have you understood? An entire profit transfer to whom? Parent company. Entire profit transfer to parent company. Understood? But out of 57,000, how much adjusted? 15,000. How much remain? 42,000 remain. Okay. Next year, what is the profit? 1 lakh. Once again, 30,000 belong to MI, but it will be first adjusted with what? 30,000 will be adjusted with this, and 12,000 again remain with the unadjusted. So once again, nothing will be transferred to MI. Nothing will be transferred to MI, and this entire profit will be transferred to what? Parent company. Understood? Have you understood? So can you say once again it become what? The balance become nil. Balance become nil. And what is the unadjusted profit? 12,000. 12,000 still remain unadjusted last year. Last year is what? 1,50,000. Now what is the 30%? 45,000. So can you say out of 45,000, how much loss will be adjusted? How much remain? So this 33,000 will be transferred to MI, and balance will be transferred to parent company. You can see 33,000, 45 minus 12 they have done. Directly you can say 33,000 will be transferred to what? MI, and balance will be transferred to what? Parent company. This is the concept. And MI as on last year will be 33,000. 33,000. This is one good question which is asked only one time in CA intern exam. That was, I think, some of the year. After that they have never asked. But sometimes suppose they want to ask this type of question of 6 marks, 7 marks, they will give this. And if you have not practiced, you will not be able to understand what to do. So good question. Okay. Chalega. So this can be asked. As a 1 or 2 year in MCQs. What is the MI balance? Negative will come, you say 0. If it is coming negative, what do you say? MI balance is 0. So can be asked in 2 marks MCQ question also. Got this point? Understood? Yes, sir. With this consolidation completed. Understood? I have done my job. But practice required. And now if you have understood my format, follow my format. First, a statement of net asset is not used by ICI also. So don't be confused with ICI solution. But if you have understood concept, you can understand ICI solution also. Chalega? Okay. Do today some question from ICI book.